Consumer confidence data. Asian stocks drag lower by losses in Hong Kong and China once again amid concerns over policy. The door plug from the Boeing 737 MAX 9 jet, which suffered a fuselage panel blowout, has been... Currently close to a 4 percentage point. Again, as Saudi Arabia cuts its prices, the output coming from non-OPEC plus members and, of course, concerns about demand. Iron ore futures also softer as we sort of look at basic resources as a sector later, currently down 0.4%. Let's briefly check in on equity futures then. The concerns are the handoff, of course, from Hong Kong, particularly those tech stocks. DAX futures currently down 0.1%. FTSE 100 futures off by 35 points. And over in France, the CAC current off by 0.2%. Just seconds away then from the market open. Not only do you have slightly softer data out of Germany in terms of those factory orders, but of course you also have industrial action, and we're reporting live from Berlin on that. The German, of course, index takes a little bit longer to open in the session. Currently the FTSE 100 currently pointing lower by 0.1%, and we'll have a look as well in terms of the sector moves, particularly around the energy sector on the back of softer prices coming through from Brent and WTI, but also iron ore slightly weaker as well in terms of the demand impulse coming from China. Iron ore prices down, so we'll see how that reflects in basic resources as well. And the links to the FTSE 100 currently down 0.3%. Over in Italy, the FTSE MIB is dropping by 64 points so far this Monday. In France, the CAC current off by 0.2%. The Spanish IBEX in similar territory off by 23 points. Let's flip the screen then and see how the sector play out is breaking down this Monday morning. So the sector screen, and again, we're going to look at the pharmaceutical sector as well, because some interest there coming through from Bayer. And then we have to think about the implications of the ruptures around Boeing and the linkages to some of their suppliers in Europe, as well as their suppliers in the US, of course. But for us at the open, it's those European suppliers to Boeing that may be impacted. Banks currently down 0.3%. Here's the energy story, though, and that is the pain point coming through. Energy currently as a sector down 1.2%. Basic resources, as I flagged, also softer, down 0.7%, and softer and lower iron ore prices, part of the mix there. We look at technology as well, given what is unfolding in China, and again, concerns that policy is not going to be strong enough to support the economy. Continued uncertainty as well around those gaming regulations. Healthcare is currently down 0.1%, despite the optimism coming through. The good news, at least for Bayer and its trials. Healthcare now turning positive, actually, and we'll break down the Bayer story for you with Joe Easton in more detail. Autos as a sector currently off about 0.1%, but really the standouts are energy, basic resources, and tech in positive territory, not by much though, by about 0.1%. Let's bring in Sophia Horta-Acosta now from our Markets Today blog for a look and a take on what is happening across these markets. Sophia, we were talking about the China story previously in the previous hour. What is standing out to you today? Where is your focus in the session this Monday as we kick off the week?
So the blog focused very much on the UK. So we're looking at the jobs data there. I think the conversation right now, not just in the UK, but broadly in markets, is whether we'll get a soft landing, whether the economy is strong, whether the disinflation narrative really feeds through. And the first week of trading, Tom, you weren't here, and it's a good thing you weren't here. It was very, very volatile, very confusing, really low volumes. It wasn't really a real week, but you saw those reversals from the December trades. December, everybody was betting on interest rate cuts from absolutely every central bank, and now you see some of that pared back. There was jobs data on Friday which confused things again in the US. So this week, I think, will be the first real week of 2024 when you look at liquidity, and I'm really interested to see which kind of side of the trade markets will fall. Will it be, will those interest rate cut bets continue to be paired, or will people start to again double down, even though central bankers keep pushing back? That has repercussions for currency markets and government bond markets.
You and the team on the Markets Day team do have that lens, of course, on the UK. And there have been some pretty bold calls in terms of UK assets for 2024. One jumped out to me was the Fidelity call on the pound at 140 by the end of this year, 140 on the pound. What are the calls coming through? What other calls are coming through? What are strategists saying about the ability for UK assets to perform in 2024
So a stronger pound, I mean, that's also a dollar story, right? And again, it's the race to cut, or the race to not cut, I should say, from the central banker's point of view. Who will cut first? That will chart the path for the pound. And the expectation is still that the Fed will cut first. The BOE still has this kind of tougher fight against inflation. There's still stickiness in the jobs market. We had jobs data actually out of the UK today. It showed, again, a degree of resilience in the labour market here and wage growth pressure. So still a lot for the BOE to look at. But also, I mean, Tom, FTSE 100, I think that's such a complicated index to forecast, because not only are you looking at sentiment towards UK assets in general, because the FTSE 100 tends to suffer outflows when people are not too sure about whether the UK will go into recession or not, and also around the pound. But there's also the global story. What's going to happen in China? The kind of pound-dollar translations really matters for the FTSE 100. Mining stocks. So you almost have to have a view on the entire world if you're going to have a view in the FTSE 100. The one key thing, though, is that people are getting more positive on the UK economy. Goldman and Bloomberg Economics revising up their GDP estimates. What that means for markets, I think there's still a question mark there, because it's a really fine line between the kind of flat growth that people are predicting and what could be a recession in the UK.
Okay, and it's a potentially big week as well, switching focus to the crypto space. It's a potentially big week for Bitcoin.
So Jan 10th, that's the date on your calendar, on our calendar. Tom, I mean, it's the date that the SEC in the US could essentially decide whether a spot ETF backed by Bitcoin, this would be the actual first one, whether it can start trading. The SEC, Gary Gensler, is very much against. He's not in favor of crypto. I think we can put it that way. That's a very kind way of putting it. But would-be ETF issuers, this includes BlackRock and Fidelity. They have until the end of today to submit any changes to their applications. And there's so much speculation in the market, the SEC will actually have to relent because there's so much demand, clamor for these ETFs and approve them. And that's why Bitcoin rose 160% last year and was again having a good start to the year before that kind of all tripped up. But again, last week was not a real week of trading. This week is the first week back for 2024.
Gary Gensler, maybe through gritted teeth, will have to make those approvals. We will see later this week. January 10th. Sophia Horta-Acosta, thank you very much indeed on Bitcoin, crypto, and of course UK assets and the prospects maybe for a slightly more resilient economy here in the UK. From our Markets Today team, and of course you can get more from Sophia and the rest of the team on the front page of the Bloomberg UK website or by typing TLIV GO on the terminal. Here's what else we are watching for this week then. Late tonight, UK time, we're going to get Tokyo CPI, so inflation out of the capital of Japan, of course, and it's an indicator of broader inflation pressures or lack thereof. Ahead of that BOJ meeting, of course, really consequential later this month. Tomorrow, there's German industrial production. We saw those factory orders coming in below estimates today, so you get that industrial production. And in terms of central bank decisions, a Polish rate decision. On Wednesday, the World Economic Forum's Global Risks Report will be published. There's also a 10-year Treasury reopening. And on Thursday, watch for US CPI data for December. That is expected, core inflation expected, core CPI expected to come in at 3.8%. It follows a 30-year Treasury reopening. And on Friday, we're going to get CPI, PPI and trade data from China, so a data dump out of China, and US earnings season as well, kicking off on Friday. Coming up, the HS Tech slides, that index, of course, as China tightens rules on gaming. We discussed that, whether enough support has been rolled out for the world's #2 economy. What will it take to get international investors enthusiastic again for Chinese assets? That conversation coming up. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Next week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Coverage begins next week, only on Bloomberg Television and Radio.
Welcome back. Happy Monday. This is Markets Today. We are 11 minutes into the European trading day. You're seeing losses, modest losses of about 1/10% across the European benchmark. Gains coming through for media, utilities and insurance. But on the downside, energy, the biggest loser across your sectors, down 1.3%. Let's check in then on some of the individual stocks on the move with Joe Easton. Joe, what's standing out to you?
So we saw some decent moves in these aerospace stocks. First of all, at the open of trading in Europe here, Airbus gaining around 2% at the open, coming down a bit now on this potential competition boost, given Boeing grounding around 170 of the 737 Model 9 planes over the weekend as well. And we've actually seen a couple of suppliers dropping as well. So we've got Safran and Leonardo, both down around 2% as well. But as I say, coming back up, trimming those declines at the moment. In terms of Boeing itself, over on the Tradegate exchange, this is the retail investor-focused German exchange, much smaller, but we're seeing it down 7%. So as I say, a significant move in these stocks. Keep an eye on US pre-market trading on Boeing, which starts in around 1 hour's time for the big liquid move in that stock. Then we'll flip over and look at a couple of other ones we had in stocks to watch. First of all, Bayer announcing that positive data from their menopause drug, potentially €1 billion worth of sales coming from that product, according to analysts over at Bloomberg Intelligence. So that one getting a boost today. Pandora up around 3%. Big growth in the US in terms of their charm bracelets over Christmas. The biggest market now is the US. They haven't upgraded their profit forecast though, but the sales numbers being taken pretty positively today. And Shell did do a trading update before the open of trading. There is a weaker oil price today though, so potentially that's coming down. Shell was pretty bullish on their gas trading, seemed to be doing pretty well on that, but it seems to be the oil price weighing on Shell with that one coming down around 2% at the moment. But take a look at CMC Markets, Peter Cruddas' company, the conservative backer. 20% gain for that one. They've got a trading update today. They've recently launched a stocks trading platform alongside CFDs, and that is doing well according to them at the moment, according to that statement. as well. We need some Pandora charms. Mohammed's back, the producer, and he loves a pun, so we'll go with Pandora shares on the charm offensive today. I think that one will do. That one was a bit of a gem. But we'll move over to the final board just to have a look at a couple of ratings changes. And there we go. Fresenius Medical downgraded at Morgan Stanley, which says that the increase in GLP-1 obesity drugs will reduce the demand for dialysis machines. That's the big concern there. MS doing some damage in Galp Energia in Portugal as well. That stock's been on a good run over the past year. So MS going underweight on that one. Berkeley Group is downgraded at Barclays, who thinks that the rebound in UK home builder stocks has now been overdone, so they cut that one. And finally, Elia over in Belgium. This is a power company. They've got an upgrade at Exane BNP Paribas, who like the valuation on that one. So that one of the best performers in Europe for Elia over in Brussels.
Okay, Joe Easton from our equities team on some of the stocks on the move this Monday morning. Thank you. Let's get back to the macro, though, because we see more selling pressure across Chinese equities. Once again, concerns about policy, concerns about capital outflows, or at least outflows from Hong Kong by foreign investors. And you're seeing the HS Tech Index, that closed low by almost 3%, but also on the mainland, the CSI 300 ended in negative territory, down by a little over 1% as well. On the sidelines, meanwhile, of the UBS Greater China Conference, the Swiss banking giant's China country head, Eugene Chen, told Bloomberg that he expects more stimulus measures to come from Beijing. Take a listen.
I think overall the government still has a lot of tools in their toolbox. So a lot of new measures and potential stimulus packages are being considered, as we understand. So more things will happen, and with all that, we see Chinese market will recover gradually, but certainly could potentially solidly in the new year.
Okay, so that was the head of UBS, their China operations, Eugene Chen, speaking to Bloomberg earlier today. For more on the China story and the wider EM space, let's bring in Polina Kudiavko, who is the head of emerging markets and senior portfolio manager at RBC Blue Bay Asset Management. Polina, what would it take for you and the team at RBC to turn more constructive on China credit?
Hi, Tom. Great to see you. I think when we look at China, as you correctly pointed out, the market lacks clarity. Clarity on policy when it comes to real estate sector, clarity on policy when it comes to growth trajectory and the drivers of that growth. As long as we don't have clarity, it's very difficult to align yourself behind the policymakers. And as investors, we need that clarity in order to deliver returns in emerging market fixed income.
So far, for now at least, it's that lack of clarity that is failing to offset the valuation appeal that some are saying is now starting to show in Chinese asset. The valuation is not enough to draw you in. You need that policy clarity.
Absolutely, because let's remember, as fixed income investors, our upside is our carry and small price appreciation. Our downside always outweighs our upside, and therefore policy clarity is crucial for fixed income investors in China.
Okay, so for now we steer away from China, but there are opportunities, and you're clear about this, within EM debt in 2024. You're relatively constructive broadly on the sector. Talk to us about where those opportunities are.
Absolutely. In one respect, we can say that 2024 looks somewhat similar to 2023, where we're starting the year with relatively high single-digit yields in emerging market fixed income. We're expecting to see inflation slow down. We're expecting to see Fed cuts coming through. And this is a very positive environment for emerging market fixed income. But in other ways, we feel that the portfolio construct can be slightly different. For the last 2 years, we've been favoring a barbell approach, where on one hand, we overweight high quality names that are mostly biased towards energy sector, given our high conviction on commodity prices. And on the other side of the barbell, we were overweight what you would call serial defaulters, the countries that have just come through default and therefore had less correlation with the broader market. We feel this time around we have less conviction on the direction of the oil price going forward, and therefore perhaps one should shift the portfolio more in higher quality double B names and be more opportunistic in those single B names, as well as the names that have severe, strong bias towards the oil price.
Okay, so you start to reassess your exposure to these oil emerging markets. And you talk about the fundamentals as well, a combination of relative fundamental strength with central banks that have taken orthodox measures And I just wonder, is it your take that investors have underestimated, underappreciated that combination that's come through broadly across EM?
Absolutely. I think that if you look at the state of play in emerging markets today, you have an asset class that gives you a combination of very attractive valuations, orthodox policy mix, in fact, potentially zero default forecast for emerging market sovereign this year as it was last year, which investors forget. And therefore, as a fixed income investor, one would argue that you have strong tailwinds behind you. However, what market doesn't like is uncertainty. And we have uncertainty with regards to policy in China. We have uncertainty when it comes to elections. We have the highest concentration of elections in emerging markets in 2024. And most importantly, we have a big uncertainty in the US election that is coming towards the end of the year. And in our view, when you have that amount of uncertainty, but you're still being paid for having fixed income risk, perhaps the best way to approach the markets is actually to be invested, but be quite opportunistic and technical when it comes to higher risk investments while we wait for more policy clarity more globally.
When it comes to India, one of the standout market stories of 2023, does India, has the window, has the door closed on the India opportunity given valuations that to many now look stretched, even though the fundamentals are looking very attractive?
I think that looking at India, we have to take a longer-term view. And the longer-term view is India has been the key beneficiary of the deterioration in the relationship with China, unfortunately of the Russia-Ukraine war, given the cheaper oil supply that they're now getting. They've increased substantially their exports to the US, and political stability underpinned investors' comfort in India. Now, as you correctly pointed out, the valuations have run up ahead of themselves, and therefore we feel that we might see a bit of a correction, be it equity or fixed income market. But I think because of this positive fundamental trend, we would look at it as an opportunity to add exposure to the country rather than reassess our view on the country. Okay, still looking to add exposure to India with that long-term horizon, and on the back of those solid fundamentals is the view coming through from Polina Kurdyavko, the head of emerging markets and senior portfolio manager at RBC Blue Bay Asset Management, also with a view there, of course, on what is happening more broadly on the wider EM space and how to readjust that barbell approach, maybe reassessing the commodity exposure, still steering clear of China credit, at least for now. Thank you, Polina, very much indeed. Coming up, the grounding of 737 MAX 9s goes global. That's as the Alaska Airlines mid-flight blowout puts Boeing's comeback plan firmly in jeopardy. More on the impact on some of the carrier's European suppliers next. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion.
and hoping that it comes in time. Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Now, the door plug from the Boeing 737 MAX 9 jet, which suffered a fuselage panel blowout, has been found. In a press conference, the U.S. National Transportation Safety Board also said the cockpit voice recorder was unusable.
The circuit breaker for the CVR was not pulled. The maintenance team went out to get it, but it was right at about the 2-hour mark, and it was completely overwritten. At 2 hours, it re-records over it, so we have nothing from the CVR.
Let's get more then from Bloomberg Aviation editor Benedict Carmel. Benny, what else is the safety board saying at this point?
So we had a press conference from the safety board last night. This was the second one, and they're really keeping very close eyes on this. There are crews on the ground, teams investigating the aircraft. As we just heard, the cockpit voice recorder unusable, but frankly, they have so many other things to go by that this is sort of an annoyance, but nothing that should crucially sort of impede the investigation. We have, as you said, now found the door panel, the plug, as it's called, so that will give some vital clues as to what might have happened. Just to recap, this plug came explosively flying out of the left side of the fuselage. This was late on Friday. Nobody was seriously hurt, but again, the NTSB did say in their press conferences just how incredibly lucky everybody was. They released a little bit more detail yesterday on the actual incident, including that the pilot's door, the cockpit door, flew open as pressure rushed out of the aircraft. That gives you a sense of just how violent this reaction was. This is a fortified door that is normally locked. So for that to sort of burst open gives you a sense of what could have gone horribly wrong, and everyone was very lucky that it didn't, and everyone was able to get off this plane alive.
Okay, Bloomberg's airline editor Benedict Carmel in Berlin with the latest then as the investigation continues. And of course, we continue to watch the implications for Boeing, which had hoped that 2024 would be a turnaround year for the company. Coming up, a global push to transition to EVs is putting Slovakia and the Czech Republic's auto industries in jeopardy. More on the threat to what's been dubbed the Detroit of Europe. That is next. This is Bloomberg.
Politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power.
Balance of Power. Live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
I'm a conservative, but I'm not in a bad mood about it. Fellow governors.
Bad mood about being conservative. Is that because you feel like populism has taken control of your party?
And Joe Matthew.
What is it about race that bothers you about the new chairman of the Joint Chiefs?
Our military is becoming so political that we're going to go south when it comes to readiness.
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that
it.
Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience would get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg. Context changes everything.
From New York City.
From London, in Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This is Markets Today. We are 30 minutes into the European trading day. The top headlines then. European equities tread water as traders await inflation reports this week from the US, Japan and China. In corporate news, Bayer jumps after its experimental menopause drug successfully reduces hot flushes in women in 2 final stage studies. Plus, the door plug from the Boeing 737 MAX 9 jet, which suffered a fuselage panel blowout, has been found. But US federal air safety investigators say other key evidence has not been recovered. This comes as the models are grounded by airlines across the globe. Let's check in then on these markets. We are treading water, as we said in the headlines, across European equities. It was a negative session over in Asia, particularly pronounced the sell-off in China. Hong Kong, with those tech-listed companies there, the HS Tech Index closing down by almost 3%. Then you had the data out of Germany that didn't really help sentiment with those factory orders coming in below expectations. And economists, of course, expecting that economy will have been confirmed to be in recession later this month when the latest GDP print comes through as well. Across your sectors then, as you look at the benchmark, just down 0.1%. The DAX, interestingly, in more positive territory, up around 26 points, despite the industrial action and the weaker economic data across your sectors. This is the picture then. The standout in terms of the gains coming through from technology, but on the downside, you're seeing losses for energy and basic resources. Iron ore prices are lower this morning. Brent is also off around 0.8%. Energy as a sector down a little over 1%. Let's get to what's happening in the auto sector then, as we look at just modest losses coming through for that sector. In fact, it just flicked into the green as I was saying that. Slovakia and the Czech Republic are the world's biggest car producers on a per capita basis. The auto industry has been the main driving force of their economy since the end of communism, winning them the nickname of the Detroit of Europe. Now the transition to EVs, well, it's putting that industry in jeopardy. For the details, let's bring in Bloomberg's Andrea Dudek, who is in Prague with the details and the Bloomberg big take of the day. Andrea, how is this shift to EVs playing out then in the economies of Slovakia and the Czech Republic, and what are the challenges and what have been the challenges as they've adjusted to the EV revolution?
Looking at the Czech Republic and Slovakia, 2 nations in Central Europe, you're getting sort of a mixed picture. On the one hand, you have the major car makers that are investing billions of euros to get their plans and products ready for the shift. And then you have the vast network of auto suppliers that employ tens of thousands of people in both countries who are struggling at times to adjust to this shift.
And particularly when it comes to those part suppliers then, how are they adjusting, and what has the impact been across those 2 countries?
It's still early to tell, but some have already laid off workers. Some are warning that they will have to be forced to lay off workers as well. Just to give you a picture of the importance of the auto industry on the economies, on the shares of exports, in the case of Slovakia, the auto industry accounts 42%. In the case of Czech Republic, 25% of exports are related to the auto industry. So some of these parts makers are either looking for new products, new markets, or just saying flat out that they will not be able to keep all their workers.
Some of the neighbouring countries, so we're thinking Poland, Hungary, they have attracted investment, notably, of course, from China when it comes to the build-out of battery facilities and battery factories. Is a similar picture emerging in Slovakia and the Czech Republic? Have they managed to attract investment within this sector?
Both countries, both governments in Prague and Bratislava are desperately trying to catch this trend and welcome investors into the battery plants. But so far, they have not been able to copy the success that is seen in Budapest and Warsaw. But maybe in the next few months and years that would change. That is at least the hope here, that attracting battery plants would help the auto industry.
Okay, Andrew Dudik in Prague with the details and the insights from this Bloomberg Big Take around the Detroit of Europe, the implications then for Slovakia and the Czech Republic as they try to readjust those car industries, those crucial auto industries, to the transition, of course, to electric vehicles. Thank you very much indeed. Let's get to some of the other top stories on the Bloomberg terminal then this Monday. The Wall Street Journal says Elon Musk's drug use is worrying executives and board members at businesses he runs. The Journal cites witnesses saying Musk has used LSD, cocaine, ecstasy, and psychedelic mushrooms, often at private parties. Musk said in August he had a prescription to use ketamine as an antidepressant. Musk didn't respond to requests for comment. US Defense Secretary Lloyd Austin remains in hospital amid growing criticism over secrecy surrounding his condition. Austin went into hospital on January the 1st for elective surgery, but complications sent him into intensive care. The Pentagon says the man who oversees the world's largest military is recovering well, but Republican lawmakers have called for consequences over his failure to go public for days. And the UK's RMT union says a strike planned for this week on the London Underground has been called off after progress in talks. The strike had threatened to cause several days of travel chaos. China has announced sanctions against 5 US defense industry companies in response to the latest arms sales to Taiwan. The measures freeze the properties of those firms in China and prohibits Chinese organizations and individuals from working with them. China's decision is seen as the latest retaliation to the US approval of some $300 million in possible military sales to Taiwan, disclosed last month. And China has detained the head of an overseas consulting firm for allegedly conducting espionage for the UK. The Chinese Ministry of State Security said the MI6 intelligence service employed the consultant from an unspecified third country. The ministry's official WeChat account accuses the alleged spy, surnamed Huang, of providing the UK with state secrets and intelligence. And Jefferies says Apple's iPhone sales slump in China is deepening, and the company is likely to see volumes decline further this year. The iPhone maker's latest generation got off to a sluggish start in China last year. Now analysts led by Edison Lee see a 30% year-on-year decline, citing industry checks. The rest of China's mobile market grew in December, with Huawei being the biggest benefactor. Coming up, 2023 was a stellar year, of course, for tech and AI. We're going to discuss the year ahead for the sector with Konstantin Sidorov, the CEO of the London Technology Club. That is next. This is Bloomberg.
much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges. Britain's next.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Starting off 2024 with a little bit of a breather.
Investors start to take really a sober second look at what the economic environment is going to look like in the year ahead.
Equity markets have rallied 16% from the low point in October.
We were in the camp that 2024 wasn't going to be a stellar year anyway, and we thought actually the rally was overdone.
I don't think that you can have the kind of growth that we've had given the kind of economic backdrop that we're looking at.
The Fed is probably going to be disappointing here relative to the speed at which rate cuts are priced into the market.
We see a lot of value in rate-sensitive cyclicals at the moment. Even though a recession is still a big risk, we're still not sure what breaks underneath the surface.
2024 doesn't necessarily need to be a complete washout, though, but we think at least the first 6 months possibly not going to be stellar for equities.
It's just a really great time to play a little bit of defense.
You have to be careful here, but I don't think this is a rally or this is a market that you can really sit out.
Okay, Bloomberg TV guests there weighing in on what to expect from the stock market this year. This is a majority of respondents to the MLive Pulse survey see the biggest risk to earnings being a recession. Of course, tech was a standout in terms of the equity moves last year, with the Nasdaq ending up with gains of more than 50%. But on the flip side to that, tech startups in the US and Europe as well, facing a funding freeze. Let's get the take then in terms of the tech world and bring in Konstantin Sidorov. He's the CEO of the London Technology Club. It's a platform for investors and tech experts to co-invest, network and exchange ideas. And Konstantin has been active in the tech world for a couple of decades at least, an early investor as well in Lyft and Spotify, two names, of course, you will have heard of. Konstantin, thanks for joining us to kick off the year. And your outlook then, it was a challenging year at the startup level, but top line, the Magnificent Seven performed, of course, extremely well in 2024. In 2023, how do you see 2024 unfolding? And let's maybe start with the funding squeeze for startups. Is that winter, the funding winter, starting to thaw now for European startups?
I would not thank you, Tom, first for inviting me. I would not call it as a winter. Definitely it's not easy time. And so definitely some startups looking for some problems with raising new capital. But at the same time, we see many very good company which has no problem at all with raising. On top of that, we see much less round over previous year because many companies moved to value creation, to profitability, decrease their spending. So the period between the rounds increased significantly. So that's definitely an issue, but I would not say that it's a major issue.
Okay, well, it certainly arguably would give you as an investor and your counterparts more leverage in terms of extracting the kind of term sheet that maybe you would be looking for from some of these startups. You would argue that this moment is a potentially huge opportunity for investors within the tech world. The start 2024, you say that this could be pivotal.
Yes, I completely agree with you. It's an amazing time for smart investors. First of all, we see the big confidence from investor side for 2024. All macroeconomic parameters are much better than they were forecasted even half a year ago. We see first signs of recovery of IPO market. I expect a lot of activity in M&A space in 2024. So the raising confidence of investors would definitely drive the investment and deploying capital cycle. So that's why I'm very optimistic about 2024.
And we know, and you've talked about this as well, you've written about this, that there is a lot of dry powder to be put to play. So that's the optimistic take. And you pushed back on the idea that there was a funding freeze, but you also talked about cost discipline, value focus coming through from some of these entrepreneurs. Is there a risk of bankruptcies coming to the fore in 2024, down rounds? Where are we in terms of that potential risk? Because yes, rates may be coming down this year, but of course from a pretty high base.
We didn't see a lot of bankruptcy over the last year, and I don't think that we'll see a lot in 2024. But the other side, that we'll see more and more down rounds. And that tendency will continue in 2024. Not so much bankruptcy, not so much insolvency companies, but a lot of down round. And that brings a lot of opportunities to the investors. So that's, as I said, it's a time for smart investors. And the paradox that when it's difficult to raise, it's easy to deploy. Yeah. So that's why for us in VC world, I think that it's amazing time.
Okay, and of course we can't talk about the tech world without talking about artificial intelligence. What is the Konstantin Sidorov strategy around AI?
Wow. Strategy to invest in AI. That's
Which parts of the ecosystem? Are you investing in the underlying models? Are you investing in the companies that build the applications on top of those models? Where's the focus?
I'm a strong believer in AI. If you remember our conversation 4 years ago, and you asked me about what is my favorite sector, I immediately said it's AI.
Indeed, yeah.
It was 4 years ago, and I'm still a big believer in it. And I think that 2024 will be driven by AI company, but the focus maybe will shift from fundamental generative AI companies like OpenAI to the sectoral second players companies specialized on particular industries or segment. And these are where we're going to be active, very active. So for example, already 60% of the company where we as LTC investors used AI as a tool, and in our fund 4 we are going to increase this level to 80%. So AI definitely is our priority.
Okay, very interesting, Konstantin. Before I let you go, anything else that you particularly like, anything else that is exciting you as you look ahead to the rest of the year?
Wow. Overall year would be very, very exciting, I think, in many, many aspects. So we'll see a lot increase of secondary markets. So that's, I see a lot of activities in the secondary market. I see a lot of consolidation, and the market will be much more healthy, tech market. So I'm really very optimistic about it.
Okay, unadulterated and unhinged, of course, not unhinged, but unadulterated and very pronounced optimism coming there from Konstantin Sidorov, CEO of the London Technology Club, also someone who's invested, of course, over the last couple of decades, particularly in names like Lyft and Spotify, as well as many others. Thank you very much indeed for the take there in the preview, the outlook for the 2024 tech sector. US Secretary of State, meanwhile, when it gets to the geopolitics, Antony Blinken warning that the Israel-Hamas war could easily spill over into a full-blown regional conflict. His comments come as he travels across the Middle East trying to calm tensions and urge Israel to do more to protect civilians in Gaza. Let's get the details then with Bloomberg's Yusuf Gamal Eddin in Dubai. Yusuf, what are the main goals this time of the Blinken visit? This is his fourth visit to the region since, of course, those brutal attacks on October the 7th.
Absolutely. So this is a really tricky tour that he's doing of the region because it's not clear what the exact goals are. Obviously, it is to reduce the violence as much as possible. But in terms of a ceasefire, which is something that he was able to secure in the past, doesn't look very likely. Now, the more important stop of his tour after finishing up with Jordan and eventually going to Egypt and the West Bank and a few others is what he does in Qatar, what he did in Qatar, and he's going to be on his way to the UAE and Saudi Arabia as well. The Qataris have played an important role in mediating, and they also helped broker a ceasefire that released 100 Israeli hostages. The Qataris have said a ceasefire needs to happen, the violence needs to stop. Israel and the US are not quite on the same page. There's going to be also some discussion on what happens after the war. A lot of these one-on-ones with foreign ministers from the Middle East are going to try and extrapolate some ideas as to what life after the war is going to look like on the ground in the Gaza Strip. Tom?
And Yusuf, meanwhile, the focus on those potential risks, the potential, of course, around escalation in the region, how significant, how serious are those risks of a larger flare-up at this point?
Well, with every day that passes and with the ongoing war, not just in the Gaza Strip, but flare-ups of fire along the border with Lebanon, I mean, between Israel and Lebanon, those are just fueling the nervousness, let alone what is happening around the Red Sea. Vortex said that most ships are still navigating the Red Sea passages despite some of the increased geopolitical risks. I would watch for any further developments on those fronts. It's hard to say where this is going to go, but you can always argue that logically it's nobody's interest to escalate, but then again, you're not always dealing with rational actors in war, Tom.
Okay, Bloomberg's Yusuf Gamal Eddin, thank you very much indeed. Plenty more coming up. Stay with us. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back. Happy Monday. This is Markets Today. We are 53 minutes into the European trading day. You are seeing a flat session across the European benchmark index, though across your sectors, a little bit more interest coming through with technology gaining close to 0.4%. This is the top gainer across your sectors. Bottom on the list, though, energy as a sector down 1.5%. Oil prices lower on the session. WTI at $73 a barrel and Brent at 78, down around 0.8% on concern, at least amongst some traders, that the non-OPEC plus members, including the US, of course, are pumping more oil amid a time of less demand. Let's check in briefly on some of the Boeing suppliers. We have a board showing, of course, because we continue to monitor the investigation after that Air Alaska flight, of course, had to land after a blowout. And, of course, investigation continues, the implications for suppliers in the US, but also in Europe as well. You can see some of the suppliers there. And, of course, Boeing's main competitor, Airbus, gaining 1.3%. Let's get more on the broad market take with a focus on what's happening in the treasury markets with Venram from our MLive team. So switching focus and bringing in Ven. Ven, good morning. Thanks for joining us. You're focused once again on the front end of the US curve on the back of the jobs data stateside, and you have a forecast for higher yields at the front end. You say the repricing is not done, is not over yet.
Morning, Tom. Yes, indeed, because, we got a slew of numbers on Friday, of course, and, the one from the jobs market kind of shows that the labor market is still pretty strong, although you've got the jobless rate ticking actually lower. That, of course, needs to be seen in the context of a lower participation rate. But even so, if you look at the one big number that we can't miss out on, it is the wage earnings growth. And it's at running at 4.1%, and it's ticking higher. And that shows that the Fed can't say that the rate tightening is over yet, because when you've got wage inflation running at 4.1%, that's kind of inconsistent with an inflation target of 2%. So I think that kind of tells the markets that, look, March may not be it when it comes to the Fed rate cuts.
Well, what about the ECB then, Ven? How much conviction is there that the European Central Bank will actually cut in March?
Well, before the new year, we saw, Tom, that markets were pricing in more than a 50% chance of a rate cut in March. But now it's faltered. It's come down well below 50%. We saw inflation last week. We saw core inflation at 3.6%. That is kind of inconsistent with in the ECB's 2% inflation target, of course. And they are not going to say that, look, you know what? This is an economy that needs some accommodation, especially if you look at the labor market. I mean, we've got wage earnings running well above 5% in the Eurozone, and you've got a jobless rate that is the lowest on record. If you take all those together, what you get is an ECB that's not going to be particularly hurried to cut rates.
Okay, Ven Ram from our Markets Live team with a focus there when it comes to the ECB and the Fed on that wage growth, the strength across wages in both of those jurisdictions. Remember, you can get up-to-date analysis, of course, and insight from Ven and the rest of the team on the MLive, of course, the blog on the terminal. So do check that out. That is it for Markets Day. You can get insights from us, the rest of the team on the front page of the Bloomberg UK website. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
They
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Oil under pressure after Saudi Arabia cut official selling prices for all regions. We'll discuss all of that with the former Goldman Sachs head of commodities research, Jeff Curry. U.S. investigators have found the door plug from the Boeing 737 MAX 9 jet, which suffered a fuselage blowout. This comes as the models are grounded by airlines across the globe. Plus, U.S. Secretary of State Antony Blinken warns that the Israel-Hamas war could, quote, easily spill over into a full-blown Middle East conflict as he presses ahead with high-stakes meeting in the region. So first thing is first, so let's have a look at what's going on with the European markets map. Now, we did have a pretty ugly, difficult start, volatile start to the year last week. If you look at what's going on at the moment, I guess a little bit of calmness. There's stocks and bonds are pausing after the choppy week that's been. Markets, I guess, looking for direction after some of these global equities and U.S. Treasuries slid the most since October last week on speculation that the Federal Reserve was in no rush to reduce interest rates. Now, it does seem that towards the end of 2023, there was a little bit of a difference between what we saw in the data and what markets were pricing. Maybe we go back to that new normal. Let's also look at Boeing. I think it's just opening pre-market. I think we have that call. So there it is. Boeing actually down some 9% after the extremely difficult weekend. We saw that fuselage. We also saw in the last couple of weeks and months Boeing with concerns. This is, of course, the biggest exporter from the U.S. Boeing down 8.7% in pre-market trade. Now, J.P. Morgan is predicting Treasury's bull run will continue after its current, quote, rest. The firm sees more short-term weakness, bringing the 10-year to around 4.25%, where it will eventually find material support. Now, let's get more on all of the market moves with Bloomberg's Ven Ram. Ven, last week was pretty incredible. What are the good morning and Happy New Year, first of all, but what are the arguments for and against the 2024 bond rally?
Morning, Francine. Happy New Year to you as well. I mean, what we are seeing now is the first test of conviction for the markets for the 2024 trades, which was that the Fed will start cutting rates in March. Now, the jobless data kind of shows that, that may not quite happen the way the markets were envisaging before the start of the new year. But having said that, I do think that there is a merit in piling on to duration. I do think that Treasury 10-year yields around 4% are kind of fairly valued according to my model. Even if you don't buy into my model, you just have got to look at inflation, which is running at 3.1%. And if you tack on a 1% risk premium to it, term risk premium to it, that lands you at 4%. So at 4%, we are fairly valued. We can't say the same thing about the 2-year. I think that the 2 years, the correction in the 2-year has got further to run.
So, Ven, there are signs that the labor market is cooling. What impact could that have?
Well, I think that, the labor market, while the labor market is cooling and the ISM services data painted a pretty disconcerting picture on Friday, I think what we need to take away from the jobs report is the fact that the earnings growth is growing at 4.1%. That's largely inconsistent with the Fed's target of 2%. That's the wage earnings is pretty much a proxy for inflation. So if it's running at 4.1%, the last mile of the disinflationary narrative is not going to be easy, and which is why I think that expectations of a March rate cut are kind of premature.
Ven, thank you so much. Ven Ram there. You can, of course, look at everything that Ven Ram is writing. You can also log on to the Bloomberg terminal and subscribe to all of his writings. Now, let's go back to Boeing. It's been a pretty incredible, I would say, 72 hours. Now, we also now know that U.S. air safety officials have said that they found the fuselage panel that blew off during this Alaska Airlines flight on January 5th. That means that they recovered a key piece of evidence in the probe of Boeing 737 MAX 9's aircraft sudden decompression. Now, on the back of it, it's the first time that we're actually seeing trading. We did see a bit of trading for Boeing in Germany, but now it's actually the pre-market open in the U.S., and you can see that stock is down some 8.4%. Now, this, of course, investors are trying to figure out whether the accident will affect production, whether this also affects any long-term harm to the plane maker's reputation. If you look at supplier Spirit Aerosystems, which installed the panel on the nearly new jet, it was down significantly, down 16.5% as we speak. So for more. Now, on some of what we're looking at in the market, away from Boeing, but back to the economy. For more of the U.S. jobs numbers and the battle against inflation, let's bring in UniCredit's Chief Economics Advisor, Eric Nielsen. Eric, so good to see you. To get us started on this Monday morning. I mean, last week actually was a bit crazy when it came to the market. And I feel like the end of 2023 was a bit of an odd one because the market was saying one thing and we were looking at data that said something else. Are we going to go back on track now?
Yeah, I think there's a little bit of a repricing back. We got very excited about Powell's statement, particularly about the rate cuts. But the data are not quite there yet, as your colleague said. But so a little bit of moving back. I'm a little bit more optimistic with regard to rate cuts than he is. So I think the market probably has a little bit of pricing. I think the Fed is more likely now to start in May, if I had to make a guess.
But what happens? So the labor market seems to be weakening, again, at the margins.
Yeah, so in America, the whole question is about soft landing or not soft landing, and soft landing is sort of the better outcome where it could be a little bit more bumpy. And in that scenario, I think you would see the Fed start to cut rates. We also have an election at the end of the year. They don't want to crash land the economy for sure, right? On wage growth, he's right to say 4.1 is higher than the long run consistent number, more like 3.5. But we have to remember we had this high inflation, so what labor is doing now is gaining back a little bit of the loss of real income. That's not long-term inflationary, and I think the Fed looks at it more in that term.
But Eric, do you find it useful to look back in 2023 and understand why we got all the predictions so wrong? And I know there was like a no landing scenario, a soft landing, but really it was all over the place. Is that useful to try and understand what we got wrong? What do you think it was?
Yeah, always. I mean, this is what we economists, we do spend our life on, where we look back.
Introspection.
Yeah, exactly. We see what we get wrong. We try to learn from it. The fact is that we have gone through a multiple set of shocks. And I don't know that we really fully understand it yet. But I think if there's one thing you take away now is that the whole inflation story was more a supply shock than a demand shock, and probably in America, for Europe for sure, right? But also in America. And therefore, we are now seeing this quite rapid decline in inflation, even though labor market is strong. And there is still a big loss in real income in America. And there is no left excess savings. The saving grace we had talked about for the last 6 months is not there, apart from in a very small pocket of very wealthy people who probably don't go spend it.
But do you expect the Fed to actually cut rates in an environment where there could be a crash, or is this just because inflation is coming down?
Yeah, they would try to get ahead of any crash and thereby prevent it. So I think the way I would look at it is we had a period because of all these shocks where the Fed and the ECB kind of threw the models away and say, we can't really figure this out. We're all wrong about this, but inflation is too high. We have to act. If I were to make a guess, I think at the Fed now, we are coming back to the models a bit, which is a good thing, because that means it's more forward-looking. You should never set monetary policy on the basis of inflation now or the last number or what you sort of look at. You have to rely on forecasts, even if they're not good, right? It's the only way, right? So then take the hope that it's more or less right, and you adjust along the way. So,
I know, but going back, I mean, the forecasts are so hard because you're basically looking at monetary policy and the effect that has, plus you're front running what could have happened.
Yeah, absolutely. And maybe this is a much bigger question, right? Maybe we have come to a stage where we have to think about inflation timing a little bit differently. The idea that you can hit 2% again and again is an illusion, right? We had 10 very lucky years, 15 lucky years of a deflationary pressure on the world, and it seemed all so easy. But it's highly, highly unlikely that that's the world we are going into. We'll get a world with much more shocks and stuff, and you'll get these bumps along the way. And God forbid we get central banks that try to fine-tune inflation numbers on a quarterly basis. It can't be done.
But Eric, do you think central banks, so the Fed, but also ECB, maybe the Bank of England, could live with inflation at 2.7%, 2.8%?
They really should. They really should.
But would they? Because it's credibility.
No, the Fed more likely. The Fed more likely, and maybe the Bank of ECB at this stage not so. I think it's and you heard Isabel Schnabel even talked about. I mean, she had to say maybe in the present environment that 2.1 was not good enough. That's just not real, right? I mean, in my world, I hope that they would sort of start to indicate sometime during the year that sort of a 2-3% range for a while until we see all these bumps sort of play out is okay. I mean, but we are not there yet.
Are you optimistic about 2024?
No, not really. It's look. If you look at all the forecasts for 2024 from the IMF, the OECD, the consensus numbers, we think we had 3% global growth last year. We don't have all the numbers yet. And all the forecasts are sort of between 2.5 and 3. 2.5 is basically global recession, right? So it doesn't look good. And inside that number, we have a soft landing in America, which seems to be the upside scenario. And we have Europe somehow still produce growth of maybe 0.5 to 1% in these forecasts. Even though we have the biggest monetary tightening in decades, we have some fiscal tightening, and we have a global external demand, which is not looking good at all, right? We saw the numbers from the manufacturing in Germany come back. So I think even 2.5, 2.75 is on the upside risk. I mean, so it's going to be a difficult year, I think, unfortunately.
All right, unfortunately. Eric, thank you so much. Unicredit's Group Chief Economics Advisor, Eric Nielsen, stays with us, and we'll talk a little bit more about China. Now, let's also go back to Boeing. Again, the development that we heard in the last couple of hours, them finding the fuselage panel that blew off during this flight on Alaska Airlines, will help investigators examine what went wrong on that flight. But for the moment, Boeing down 8% pre-market, Spirit Aerosystems down 16%. They installed the panel on the nearly new jet. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want it with Bloomberg News Now. Get it 24/7
on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome back. This is The Pulse. I'm Francine Lacroix here in London. Now, the focus is firmly on Boeing today. Again, in just a couple of months, Boeing has suffered a series of quality lapses that could threaten to erode trust in the manufacturing prowess of the biggest U.S. exporter. We now understand that U.S. air safety officials have found the fuselage panel that blew off during this Alaska Airlines flight on January 5th, which means that they recovered a key piece of evidence in the probe of the 737 MAX 9 aircraft's sudden decompression. Boeing down 8%. Spirit Aerosystems, which installed the panel on the nearly new jet, is down some 16%. A couple of other things we need to watch out for is, of course, Alaska Airline. This was the flight where that panel blew off, and you can see Alaska Airlines pre-market 5.5% lower, United Airlines 2.6% lower. So let's get more now from our Bloomberg aviation editor, Benedict Camel. Benny, I mean, it's just incredible, actually, what happened over the weekend. What else is the safety board saying?
So we've had two briefings from the NTSB on Saturday night and another one last night. And on each occasion, they came out with some pretty harrowing detail on what exactly unfolded on the aircraft. We've all seen the images. We've seen that big gaping hole in the side of the left part of the fuselage. And the NTSB has said time and again that this was really very, very lucky that people didn't get killed on this aircraft. I mean, had this plane been higher, had people not worn their seat belts, people would have gotten sucked out of that aircraft. That seems without any doubt. So very, very lucky escape. The focus now, as you say, will be on that key piece of evidence, the door plug, as it's called. That's been retrieved, but also the plane itself. So right now, there are experts on the ground, sort of material scientists, structural scientists, people who know how to investigate an aircraft, and they have a lot to work with here. They have the aircraft that, minus the door, is fully intact, so they can look at sort of the frame, see if there's any structural damage. It's worth noting this was a brand new aircraft, so not some creaky old plane that might have had some structural issues. This is a plane that was only delivered a couple of months ago, had about 150 flight cycles, so almost factory fresh. And for such a huge defect to happen on a plane this new is obviously even worse, and you can see it in the share reaction on Boeing and on Spirit. They make the fuselage.
Yeah, just absolutely incredible story. Benny, thank you so much. Benedict Camel there in Berlin. Now, HS Tech slid as China has tightened rules on gaming. For more on China in general, to talk about the economy and what we can expect in 2024, let's bring in, let's bring back our guest, Eric Nielsen, UniCredit's Group Chief Economics Advisor. Eric, thank you so much for sticking around. I don't know what you do with China in 2024. I know that everyone's on tenterhooks because of the Taiwan elections. There's the geopolitics. But it seems that they're plowing money into an economy to make up for a slump in property, and you don't really know where this ends.
That's right. That's right. There are many more questions than answers in China now, right? It's clear that they are pumping money in. It's pretty clear they're pumping in an unusual way, at least one we don't believe is very growth stimulating, because they put it into all industries and directed sort of where political connections take it, and not in the new and more dynamic economy. So this is not good news. Then there is the real estate story, where we sometimes get surprised that they delay the bankruptcy proceedings by giving them more time, and other times, like we saw here this past week, that they suddenly take them to the wall. So a lot of very uncertain things goes on, and it's a bit like on the political stage, people disappear and we don't know what happens, because the data are also, they're less than they used to be. And to be honest, as we have talked about before on your show and other places, that it is impossible that GDP numbers are so stable, right? So they smooth them, and nothing particularly scary about this. But there is certainly a possibility, and I think very likely possibility, that they overstate numbers now. So it's a big mystery, and it's not looking like it's going the right way.
And that coupled, of course, with the U.S. election year, where whether you're a Democrat or Republican, it looks good and gets you votes to bash on China.
Yeah, this is the problem. I mean, the world is in a terrible place in that sense, right? It's become almost like a freebie or a vote getter to be tough on China, which is absolutely crazy, right? So this is frankly, at times disgraceful the way that they deal with it. It's a big and major economy. They do it their way. We would love to have more information how they do it and what they do and transparency. That's definitely an issue, but it should not get you votes to just sort of bash away any other country in that way. So this is a big concern. U.S. elections, big concern for sure. Right?
I mean, there's U.S. election, and we'll of course talk about the Middle East. We mentioned briefly Europe, right? It sits in the middle, but there's also a lot of politicking in this. There's elections, European Parliament elections. Yeah. And so I guess Europe is also thinking how they counter, if they can, the U.S. and China.
Yeah, I mean, to me it seems unfortunately as Europe is caught between a rock and a hard place. But Europe is an external trading economy. We're a major economy, but not hitting nearly at the weight of Europe in diplomacy, military matters, and all the rest of it, and the usual European problems. So here we have America and China sort of in tension, although in reality the tensions are a little bit less bad than they were 6-12 months ago. So let's take some hope from that between those two giants. But Europe is in the middle of the place, and we have all the elections, plenty of them coming in Europe through the year, including the European Parliament elections. And all of them the question is about how much will the far right gain? They look like they will gain across, and then the next question is, will these firewalls between the center right and the far right break down? And one place where people are, I think, rightly worried is in some of the states in eastern Germany. That in itself, just like the European Parliament, in my assessment, is not super important in the short term, but it's signaling. The far right will not come to power in 24, but it sort of slips that way.
Eric, thank you so much for all of the analysis. Eric Nielsen there, UniCredit's Chief Economics Advisor. Coming up, the U.S. Secretary of State, Antony Blinken, visits the Middle East to calm tension. So we'll discuss the very latest on that next, and this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
U.S. Secretary of State Antony Blinken has warned during his latest visit to the Middle East that the Israel-Hamas war could easily spill over into a full-blown regional conflict. Now, for more on this, I'm joined by Bloomberg's EMEA News Director, Roz Matheson. Roz, good morning. So what are the main goals of Blinken's visit to the region?
Well, a big part of this trip is simply to take the temperature of the key players in the region. He's been doing the rounds of many countries so far already and finishing his trip, it seems, in Israel. So what he's doing is trying to keep the lines of communication open between these countries. He's trying to assess what they're feeling about it, particularly Israel. Again, the determination that we're seeing from the Israeli officials to continue with their war in Gaza, no matter what, to continue against Hamas in Gaza, no matter what, despite the US pressure. And so is he able to get them to tone that down? Is he get them to slow down their war in Gaza? Can he continue to get negotiations for the remaining Israeli hostages to be released? And can he avoid this conflict spilling into a broader Middle East conflagration? Those are the overarching goals. Whether he's made much progress on that remains to be seen, because for now at least, there's no progress in releasing those hostages. And certainly there's no sense that Israel is ready to slow down its war in Gaza.
So, Roz, how serious are the risks of then further escalation?
Well, it's interesting. We're seeing those continued expressions of concern from many places that this war could spread beyond Gaza itself. And certainly that has to be a risk when you think about all the players that are involved. Many of them are also Iranian-backed proxies operating in different countries, Houthis in Yemen, also Hezbollah in Lebanon. But we've seen no intent so far for them to truly escalate. They also see the risk of a broader conflict happening.
Roz, thank you so much. Roz Matheson there on the very latest on the Middle East. Up next, we talk commodities with Jeff Curry. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Oil under pressure after Saudi Arabia cut official selling prices for all regions. We'll discuss with the former Goldman Sachs head of commodities research, Jeff Curry. U.S. investigators have found the door plug from the Boeing 737 MAX 9 jet, which suffered a fuselage blowout. This comes as the models are grounded by airlines across the globe. Boeing shares sink pre-market. Plus, U.S. Secretary of State Antony Blinken warns that the Israel-Hamas war could, quote, easily spill over into a full-blown Middle East conflict as he presses ahead with high-stakes meeting in the region. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, this is one of our top stories. Actually, it's our top story. It's Boeing. We know that the U.S. air safety officials said they have now found the fuselage panel that blew off during an Alaska Airlines flight on January 5th. That means that they recovered a key piece of evidence in their probe of Boeing 737 MAX 9's aircraft's sudden decompression. Now, just moments ago, we had, about half an hour ago, actually, we had shares of Boeing pre-market falling some 7.9%. Of course, investors are trying to assess whether the accident will affect production, whether it has any long-term harm or does any long-term harm to the plane maker's reputation. Now, the other one we're looking out for is Spirit Aerosystems. This is the company that installed the panel on the nearly new jet. And you can see Spirit Aerosystems is actually down some 16%. Let's also have a look at the airlines that have been affected by this. We were looking at Alaska Airlines. Of course, this is the airline that was, managing the flight on which this happened. I mean, just extraordinary pictures that we have been seeing all weekend come through. Pre-market, Alaska Air, you can see down some 5.2%, and United Airlines is down some 3%. So we'll have a full look, and anything that comes out of the investigation as they now have the panel in hand will bring you, of course, so stay tuned to Bloomberg with more on that. Let's talk commodities, and Saudi Arabia is cutting its February oil prices for buyers in all regions, including its main markets in Asia. Now, the price cuts come amid persistent weakness in the market. Well, I'm very pleased to be joined exclusively by Jeff Curry. He's former head of commodities research at Goldman Sachs and chair of the advisory board of the University of Chicago's Energy Policy Institute. Jeff, we've missed you on air.
Yeah, it's been 6 months.
Have you been taking a break?
Yeah, I've been out trying to enjoy the beaches, so it's up. I am now a free agent again, and so we'll see what that entails. So,
and we'll talk about what you'll do next in a second. But what's it looking like for 2024 for commodities? I know we had a choppy week last week. Mm-hmm. There's politics. I mean, it feels like everything could go okay or everything could go terribly wrong this year.
Right. Well, it went terribly wrong last year. Actually, maybe that's a good place to start, is talk about really what happened last year, because I think it's teeing it up for a reversal of some of those pressures. And the setup we have going into 2024 is classic end of cycle, which is stating you always want to own commodities. Inventories are low. Number one, spare capacity outside of oil is exhausted, and most of that spare capacity in oil resides in Saudi Arabia and UAE, and demand is at record levels. So you put those three facts together, the fundamentals are not that bad. People talk about an oil glut and everything, and you're pointing out Saudi's weaker pricing, but the reality is you're still sitting at $75 a barrel. Right. And the return on capital employed at these price levels is somewhere around 20%. So that's, the setup going in. And then I think one is on China. China, you can't deflate and delever at the same time. It's impossible because you're fighting yourself doing that. So they have to begin to reflate, because a lot of the disinflation being exported around the world is coming out of China. And then the third point is, with the immaculate disinflation, what you have is a likelihood that central banks around the West are going to cut rates. You do that, you're teeing yourself up for a fantastic 2024.
So what you're telling me is that there's definitely a bullish case, right, for oil in 2024. Well, but no one's really seeing it because everyone's just so gloomy
I think it's they've been beaten up so bad over the last year trading these things that their willingness to take a strong view, either bullish or bearish, is just not there. Consensus view is a trading range from 60 to 90.
But again, I mean, and what people missed last year was the outperformance of U.S. shale production. Could that happen this year again?
But why is everybody focusing on 300,000 barrels per day?
Because we missed it.
You missed it, but you missed 800,000 barrels per day out of Iran, 150,000 barrels per day out of Venezuela, 2 million barrels per day out of Russia. Okay. And you're worried about 300,000 barrels a day. And I was gone for that 6 months while this obsession with U.S. shale was out there, but
you know why?
Huge.
Let me tell
Venezuela in Iran.
I know, but you feel like it's further afield, so it's more difficult to look at the numbers. I mean, U.S. shale production is right there. I mean, you should be able to analyze it, right?
Yeah.
With more consistency.
Actually, if you look at where the big miss was, it was in the Gulf of Mexico. It wasn't shale. Right. And what it was the Europeans quit spending on renewables in green investments and redirected that CapEx into the Gulf of Mexico. That's a one-off. But when if you look at Goldman's numbers, they missed it by about 400,000 barrels per day. 200 of it was Gulf of Mexico, 100 Permian, 100 Bakken. The Bakken can't be repeated. Gulf of Mexico can't be repeated. The only one that could be repeated is the Permian, but you're fighting against decline rates. But I'm going to go back. You're caught. You're not looking at. You're caught in the forest, or the trees, and you're not looking at the broader picture. The broader picture is Venezuela, Iran, and Russia, and this immaculate disinflation that everybody's talking about. There's 3 points I want to emphasize about it. One, it was global synchronized disinflation. 2, it occurred against the backdrop of record commodity demand. 3, it occurred against a backdrop of a very strong U.S. and a relatively good China, good global growth. Therefore, it cannot be demand-driven. It was supply-driven. And can monetary policy or fiscal policy create supply in 1 year's time? No. The only thing that can do that is regulatory easing. And where did they regulatory ease? Sanctions on Venezuela, Iran, and Russia. 2, environmental policy. And then 3 is on immigration policy. So you got more energy, more food, more labor, and that created this immaculate disinflation. Are any of those things repeatable next year? No.
Okay, OPEC also had a difficult year because of Angola leaving, right? Can Saudi actually keep it together, keep the group together?
Everybody's focused on Angola. Are we ever going to drill for deep water offshore like that ever again? No. I mean, you're not going to put $20 billion into a 30-year deep water offshore platform that's going to be producing oil, well beyond 2050. The answer is no. The only 3 places that are going to produce oil in the future are United States, fast cycle shale production, Middle East, and Russia. And so you have Saudi Arabia, UAE, and Russia together, which are the rest of this. They're French players.
Okay, I like that, French players.
Yeah.
Do you think the UAE and Russia will continue going along with what Saudi Arabia want?
Yeah, because it's in their interest. It's in both parties' interest. What I like to say is Saudi Arabia manages the market to the downside when it's going down. Russia only manages the market to the upside when it's going up. So you got to be a little, in fact, that's another important point about, let's go back to what was a big miss. It was sanctions. I mean, Russia was exporting the highest level in the last week of December of last year, which tells you just everybody's turning a blind eye to it.
What does it? So this year, what kind of economy? And we also got everything wrong on the U.S. economy, right? Yep. There was no landing, then there was a hard landing, then there was a soft landing.
Well, I have to say Jan Hatzius got it right. So my colleagues at Goldman got it right.
He
but
did.
We got it wrong on all the market side, though.
But so what does that mean for 2024? Is there going to be introspection on trying to call what the markets do in general, or are you confident that the economy kind of glides?
I think everybody got beat up so bad last year, they're unwilling to take a strong view. And I think that the setup for all these markets is better than what it was last year. I mean, if you even take consensus GDP growth, they're just a slight bit lower than what they were last year, but they missed last year. So that means it's a pretty big bump up in expectations on growth. Because again, you have your immaculate disinflation that's going to allow central banks to ease. And by the way, that's just classic. It's just we went through the mid-cycle pause. We're going into the second half of the business cycle. This is just classic.
But nothing's happened.
Commodities.
I know, but nothing's happened to the labor market, so there's nothing classic about that. So you don't really know where that ends up.
Well, let's go back to one of my 3 points, where one of the issues that really aided the labor markets was immigration. Immigration in Canada, UK, and Germany was 2x. Now, I want to be careful. There were Ukrainian immigrants, and I think that's really important. But what it says, you got a one-off increase in labor supply that dampened the wages. That allowed this immaculate disinflation to occur. By the way, Goldman did a great piece on that if people are interested. And I think that the key point here is what that did just gave everything longer run room. So it got more. Actually, the other thing I want to go into about that can reverse in 2024. We didn't talk about the environmental policy. The other immaculate disinflation. They turned a blind eye on coal use, blind eye on oil use. Coal in Indonesia, India, and China, all-time high. A lot of that disinflation coming out of China, burning coal. Deforestation for more soy, cutting down the mangroves in Philippines for palm oil. I like to point out, people were unwilling to pay for their politics. And, and now with disinflation, inflation coming back, everybody's going to be green again.
Jeff, I remember this epic interview you gave me maybe 18 months ago where you say, we're running out of everything, and this is a massive problem with commodities worldwide. Have we redressed that with investment?
No.
So it's just getting worse?
We gave the world extra supply since you and I did that interview. You got the SPR, then you had Venezuela, then you had Iran, then you had Russia. Yeah, you got all this extra supply. You had more agriculture put into the market, again, turning a blind eye to environmental policy. But metals, I wear my copper bracelet here. The copper story, the metal story, aluminum, it is as tight as it was in 2022, 2021 when we did that interview. Actually, if you ask me what is my favorite commodity out there, it's copper.
Wait, what's the copper bracelet for? Is it good vibes or just reminding yourself? Or just reminding yourself of the copper market?
Yeah. No, but copper it's got really low inventories. Exhausted spare capacity. You had the Panama issue. Anglo-American reported misses on their numbers. And demand, even in China, was up 10% year over year. So it's a really positive story.
All right, Jeff, thank you so much. Jeff Curry, former head of commodity research at Goldman Sachs, stays with us. We'll talk a little bit more about the environment story. Plenty more ahead. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event.
is that process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Next week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Coverage begins next week, only on Bloomberg Television and Radio.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, still with us, Jeff Curry, former head of commodities research at Goldman Sachs and chair of the advisory board of the University of Chicago's Energy Policy Institute. Jeff, it's so good to have you back. You kind of went through a less gloomy scenario, right, for commodities in 2024 than I think what the market is pricing in right now. We talked about the energy transition. I don't know whether you think that COP28 was a success.
Oh, I think it was an absolute smashing success, because it brought the dialogue to a global basis and down into the oil companies in the rest of the world. So, and recognition that LNG is a transition fuel. So in terms of making progress with the challenges that the energy transition has faced with its audience, I think it's done a tremendous job.
But so what comes next? Again, we're talking about real money now being invested, and I don't know whether it's renewables. We also have companies like Shell that basically have turned around their strategy and saying, sure, renewables is nice, but we need to focus on our core. So does it delay the transition, or are you doing both things at the same time?
Let's go over, again, remember I talked about the immaculate disinflation. Yes. By the way, our three big tenets of being long commodities back in 2020 for the super cycle were R, redistributional policies, E, environmental policies, and D, deglobalization policies, RED, redlining commodity demand. All of those were reversed. And let's focus on the E, environmental policy. How was it reversed? You take here in the UK, drilling for oil in the North Sea, delaying gas boilers and a bunch of different. In fact, you had Chris Skidmore, the Tory MP. He announced his resignation last week in protest for that flip-flop on policy. Notice the timing that he did his resignation when inflation was back down to normal levels. And I go, everybody's going to be green again with inflation numbers back down to the low levels. I can say, what did we underestimate? Or we overestimated the willingness of politicians to pay for their politics. And we thought that those three things we outlined were going to stay stable as we went into there. And what we found out is prices go up, people pull back. Then as inflation comes back down, I think you're going to see everybody move back into having a green policy again. I think that's going to be the way the energy transition occurs. They go one way, this way. And also, let's go back to Shell. You have to own a portfolio of the green and the brown. Maybe it's not. I don't think Shell doing it inside of its of a corporate structure really could do it, but a portfolio needs to own both. By the way, you cannot control emissions unless you own the emissions inside the portfolio. And owning the green acts as a hedge to higher interest or to low interest rates and low oil prices. When oil prices are high, interest rates are high, the green goes down.
I know, but 2024, I think 60% or 60% of like world GDP goes to vote. Right?
Yep.
And it's unclear whether it's going to be more far right, policies that are maybe less friendly to climate change policies. So does it swing, or is there still big business that, no matter what happens, this transition will happen with this kind of swinging to the right or to the left?
Let's go over, I'm not an expert in politics, so we're getting out of where
2024, no one is.
Yeah. But let's just take the obvious one, which would be Trump in what you're proposing here.
Yeah.
I don't think it's clear that he's going to back off on the green policies. Why would he let China dominate the EVs, dominate solar? Why not just pump money into IRA, green, brown, pump it into everything out there? And I have a feeling, so policy similar, it would be like the UK policy, but pump more into green.
Right. So it's an economic policy that will happen no matter what. So this is not, it's going to be less dogmatic?
Yeah, I think it's going to be. It goes back to these deglobalization. Turn your country into an economic powerhouse on its own.
So, as an investment, how do you play that?
Well, I think owning the commodities right out will be difficult, but you'll want to be long volatility. And because if you put more green into the mix, as we've seen in Europe, it creates a lot of volatility. Because remember, renewables, they have a intermittency problem. The reliability is not there. So you end up with massive amounts of volatility in the commodity markets. I think that's going to be one of the implications. But you want to own both the green and the brown. I kind of go back. The green hedges the brown, and the brown hedges the green through the interest rate channel. And I think that when we think about those opportunities, by the way, if you have, let's say Trump did come in and spend a lot of money on everything, brown, green, and everything like that, you want to own the suppliers to those type of companies.
Jeff, what are you doing next?
Still to be determined right now, but it'll definitely be something along the lines of energy transition.
Okay, so you'll have to come on air more
Great.
often.
Thank you.
Thank you so much.
Pleasure.
Jeff Curry there, former head of commodities research at Goldman Sachs, also chair of the advisory board at the University of Chicago Energy Policy Institute. Coming up, U.S. Congress leaders reach a bipartisan spending cap deal, easing the risk of a government shutdown this month. We'll discuss that next, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Well, the conversations that matter, the insights you need. This is A Pulse, and I'm Francine Lacqua here in London. Now, U.S. congressional leaders have announced a deal on a top-line spending level for the current fiscal year, lessening the chances of a partial government shutdown on January 20th. Now, President Joe Biden has welcomed the agreement. For more, let's bring in Bloomberg's Bruce Einhorn. Bruce, good morning. So what exactly was agreed on?
So this is a deal between Chuck Schumer, who's the leader of the Democrats in the Senate. Democrats control the Senate,
and Mike Johnson, the Speaker of the House. The Republicans control the House. It's an overall target spending cap. What still needs to be done is the different appropriations committees in both the House and the Senate now need to get to work and create bills that would then lay out more specifics. And once that happens, then there would have to be votes. There's still a lot that could go wrong between now and the end of next week, which is the deadline for a partial shutdown, but at least the process is now unfolding. They've made some progress, but still quite a way to go. By far, no guarantee that we're going to avert a shutdown.
So, Bruce, does this deal actually move the needle for the 2024 elections?
Hard to say at this point. So keep in mind that this deal is not that different, actually. If you look at the numbers, they're really very similar to the deal that President Biden struck last year with Kevin McCarthy, who at the time was Speaker of the House. That was part of the debt ceiling negotiations. It averted a government shutdown later in the year, but ultimately cost Kevin McCarthy his job because there was a lot of opposition within the Republican Party. Members of Congress who called a vote to vacate the chair, in other words, a vote of no confidence in the Speaker, and Kevin McCarthy lost a job, which is how Mike Johnson now is Speaker. We already have seen that there are some members of Congress among the Republicans who are critical of this deal. One, Chip Roy, a Republican from Texas, called it terrible. The House Freedom Caucus, which is a group of some of the most conservative Republicans in the House, has also criticized this deal. So the rule that cost Kevin McCarthy his job, which is that any one member of Congress can call for a vote to vacate the chair, that rule is still in place. So if they were really upset with Mike Johnson, they could do this, which then could complicate things as the Republican primary gets underway. We'll have to see whether they're willing to take that step.
Bruce, thank you so much. Bruce Einhorn there with the very latest on U.S. congressional leaders. Boeing, you can see on actually pre-market down some 16%. Boeing 8.4% lower, but Spirit Aerosystems down 16%. This is Bloomberg.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asins is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The 737 MAX grounding goes global. Alaska Airlines mid-flight blowout puts Boeing's comeback plan in jeopardy. Traders betting on a 2024 bond rally are unfazed by the recent pullback, seeing it as a chance to seize elevated yields before the Fed cuts start coming. And U.S. congressional leaders reach a bipartisan spending cap deal, easing the risk of a government shutdown this month. First up, it is Boeing. The stock is taking a hit in the pre-market. We're down 8.25%. The door panel that blew off the 737 MAX 9, and we now have a global narrative about the fleets being grounded, has been found. Also, Spirit Aerospace, the company that fitted the part to the MAX 9, is also down 16% at the bottom of your screen. So what we're looking at so far for Boeing, this was supposed to be the year of the comeback. The entire 737 MAX 9s for Alaska Airlines has been grounded. United is the other major U.S. carrier with 79 of these aircraft in their fleet. So that said, we'll keep you updated on the Boeing price and on Spirit as we go through the morning. To the rest of the market, it was a brutal start to cross assets, the worst cross asset start to risk in 20 years. Equities continue their trade lower. Do you see that as a better opportunity to step in? Down by 1/8 of 1%. By the way, $123 billion went into cash in the first week of January. We haven't seen that kind of episodic movement. It was the best start to the year ever for cash, and stocks only took in around $79 billion. So you can see there's still a flow of money into cash. European equities are down by 1/3 of 1% this morning. Oil, the Saudis have cut the price of oil to Asia by over $2. That's hitting the oil majors. That's at the bottom of your screen. The energy component down 1.53%. What will the Chinese do? You just don't know about regulation. You just do not know the path of regulation. There is no normalcy to regulation. There is no definitive roadmap for regulation in tech. And the Hang Seng drops 1.8%. You're looking at the lowest close on the Hang Seng since 2022. This is about foreign capital not being sure of the narrative in China. Danny, good morning.
Good morning, Manus. Well, in Treasuries, we are squarely in the buy zone. 4% means even with the stronger jobs report on Friday, sure, there was some weakness around the periphery, but the selling of Treasuries did not last when we neared 4.1%. We're buying again this morning. Yields are down by about 2 basis points, just over 4%. Meanwhile, the run of the dollar strength continues. We just rounded out the best week for the greenback since 2011. It is a global rethink of where we're going with interest rate cuts. Is the U.S. really going to cut 150 basis points? We backed well off of that last week, helping support the dollar. Finally, crude, moving on what you mentioned, Manus, on Saudis lowering their prices by $2 a barrel, more than expected. That's down 1/3%. And perhaps crude really illustrates the challenge to our Goldilocks perception of this American economy. And Manus, on this, I want to bring in a quote from Julian Emanuel over at Evercore ISI, because he captures this really well, too, this idea that we are priced to perfection, that investors have embraced and nothing can go wrong. Optimism, Such a Goldilocks extreme poses risk to stocks. Elections, war, DC politics, EPS revisions could spur volatility. So, Manus, perhaps we're a little too obsessed with Goldilocks and not thinking about the risks.
Yeah, well, there's a lot of things can interrupt and swipe Goldilocks' porridge. I mean, I had Rick Reeder from BlackRock with me on Friday, and he said, look, there's backup in yields. It's a prime opportunity to buy. He still really likes equity markets in terms of getting into them on these drawdowns. And I think this comes to it. Where's the earnings per share? It's going into earnings season. Earnings per share, on that note that you've gone, there's a lovely narrative. Underappreciated double winners with strong beat records will outperform, but the overpriced double missers will underperform. So this is going to come down to earnings per share, Danny. That is where it's going to come down to.
Yeah, fair enough. And look, maybe we can apply some of the sentiment of what's happening in the dollar. Again, I mentioned the strength coming from it, the best week since 2011. It was kind of an awkward timing, though, for traders. Non-commercial traders had just loaded up on more bearish bets. They were the most short the dollar since August, heading into a week of jobs, heading into a very strong week of the dollar. Let's get in more to FX. Joining us now is Elsa Lingos, Global Head of FX Strategy at RBC Capital Markets. Elsa, thanks so much for joining us. So, I mean, some people definitely got wrong-footed last week. Is it time now for the bears to reload, or is it time to back off?
I think people are struggling in general, and part of the reason is, and you mentioned it earlier, we started off the year with pretty bad outlook for risk, but coming off the back of a Q4, which was great for all assets. And we're kind of trapped in this economic narrative where people are uncertain. You know, we've got CPI coming up this week. We've got tensions boiling in the Middle East, but not spilling over into crude prices. And I just don't hear a lot of conviction amongst clients and investors, you know, and so nobody's really piling into any huge positions, not even in currency markets.
I mean, it was the worst start, Elsa, good morning, it was the worst start for risk in 2 decades across the assets. How provoked or nervous are clients that you talk to, or are they just trying to wait and see how much more flow comes into play before they make the decision of whether it really is risk off or if it is just a markdown in asset prices?
I don't think it's nervousness, and our equity derivative strategist, Amy Silverman, had some great charts over the weekend, just highlighting how, you know, we're not seeing the call skew that we saw late last year, but we're not really seeing a massive skew for puts either. It's just a general uncertainty and lack of conviction, which it's not so much nervousness, but the lack of conviction is leading to people taking smaller positions or just sitting on the sidelines.
I mean, you can kind of sympathize with that. Also in a year where so many people got these markets wrong, perhaps you're scared. I mean, I know, again, not fearful, but perhaps you don't want to stick your neck out there. It's also a year where we have half the world's population heading to the polls. Goldman Sachs thinks that it's going to support the dollar, specifically in the U.S. Trade tariffs back on the agenda. Any fiscal pressure they think is going to be met with a hawkish response for the Fed. Would you agree with that, a U.S. election year is net positive for the dollar?
So, you know, unfortunately with elections, we don't have enough sample points to really draw some statistically significant conclusions. But I think it's fair to say that it's unlikely we're going to see any significant fiscal tightening. I mean, we saw the budget deal over the weekend, and very unlikely we're going to see any significant fiscal tightening in the year to come and even after the election. And so that leaves us with an environment where, you know, it's left to the Fed to do a lot of the work. Some interesting comments from Laurie Logan, again, you know, highlighting the fact that financial conditions have eased and the Fed's not out of the woods yet. So we're kind of caught in that no man's land where people are struggling to figure out what to do next because there's such a wide range of possible outcomes on the monetary policy side.
And Laurie Logan does go on to talk about what needs to happen with QT. So we're trying to build an understanding of what rate cuts delayed may well do in the FX space. So I want to get your view on that. But also, do you completely write off the risk that the Fed would have to hike again?
I mean, it'd be foolish to write off anything completely, right? Given what we can see happening at the moment in the Middle East, and we haven't seen it play out in oil
You don't
prices,
describe a material risk.
Analysts...
I mean, I get what your point. The caveat there is it would be foolish to write off anything, but it's not a material risk in the RBC book, is it?
No, you know, it's not what we're looking for at the moment. It's certainly not a base case, right? Our economists have been calling for cuts starting in June. They've been calling that for some time. But that said, that relies on unemployment picking up, you a further weakening of the US economy. That's not really what we saw on Friday. We're still seeing mixed data. And I think that kind of uncertainty is what's keeping people on the sidelines. It does look like we're going to get cuts from the Fed this year, but you certainly can't rule out scenarios where oil prices spike higher and we actually end up with another renewed inflationary burst.
And so how do you want to be positioned for that? Because you also mentioned Halima Croft on your team is focused on that risk that things escalate. Do you want to prepare for that now, or do you wait for the actual escalation?
So I think there are some trades that you can look at that are leveraged to that potential escalation. We've been looking at short Euro CAD, for example. I wouldn't say it's an off-consensus trade. I think there are a number of people out there looking at the same thing, but it's been kind of going sideways for a bit, and one which I think could break lower. And outside of that, I'm certainly just trying to stay clear of some very popular consensus trades. So a lot of people trying to pile back into short dollar yen, expecting the Bank of Japan to start normalizing policy and that to lead to a big move lower in dollar yen. I think they'll be disappointed again. And so, we're just seeing a little bit more on the sidelines and actually think that dollar yen, I know it sounds almost bold to say it, but could end up the year higher.
Yeah, I mean, not many people are willing to say it at this point, Elsa Manis.
Yeah, I mean, that rallied, 2.6% last week. I mean, where do you come down on that? You say many will be disappointed. Can the Bank of Japan hold out?
I don't think it's so much about holding out, but more that even if they do raise rates into zero, up to zero, or even small positive territory, the fact remains that there's still this huge cost of hedging for Japanese investors, driven not so much by what's going on in Japan, but what's going on in the rest of the world. So unless you think that the Fed is going to be materially slashing interest rates, and I mean well into easy territory, well below 3 or 2 or even 1%, it's very difficult to imagine that we're going to get a return to the widespread hedging behavior of a few years ago. And that, for me at least, means dollar yen struggles to make material headway lower.
Okay, Elsa, thank you very much. Elsa Lignos there from RBC Capital Markets, setting the FX agenda as we wait for CPI this week. Other stories trending on your Bloomberg terminal this Monday morning. China has detained the head of overseas consulting firm for allegedly spying for the UK. The Chinese Ministry of State Security has said MI6 intelligence service employed a consultant from an unspecified third party.
A series of high-stakes deadlines this week will mark the culmination of a years-long push to launch ETFs backed by Bitcoin in the U.S. The SEC has until Wednesday to take action on pending applications from almost a dozen firms.
And the jewelry maker Pandora reported quarterly revenue that beat estimates. The company was helped by soaring Christmas and Black Friday sales of its charm bracelets and other jewelry in the U.S. Danny.
Well, Manis, United Launch Alliance's long-awaited Vulcan rocket lifted off earlier this morning. The launch ushers in a new era for longtime Pentagon contract fighting to expand market share against Elon Musk's SpaceX. The Vulcan booster blasted off at 2:18 a.m. local time from Florida's Cape Canaveral.
Pretty spectacular sight. Coming up, Boeing's comeback hits a snag. The grounding of the 737 MAX 9 quickly gathers pace. The stock is lower this morning by 8.43%. Danny will break down the details.
And we're also going to break down that lack of movement, that war premium in oil. Oil falling today after the Saudis cutting prices. We'll be speaking with commodity strategist Francisco Blanch of Bank of America here on Bloomberg Brief.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I
don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Next week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Coverage begins next week, only on Bloomberg Television and Radio.
This is Bloomberg Brief. I'm Manus Rennie in New York. Danny Berger alongside me in London. Well, a key piece of the Boeing 737 MAX 9 plane operated by Alaska Airlines that suffered a serious blowout on the evening of January the 5th has been found. In a press conference, the U.S. National Transportation Safety Board also said the cockpit voice recorder was unusable.
The circuit breaker for the CVR was not pulled. The maintenance team went out to get it, but it was right at about the 2-hour mark, and it was completely overwritten. At 2 hours, it re-records over it, so we have nothing from the CVR.
Okay, so there's many parts to this story. Let's bring in our deputy editor for Global Aviation, Sid Phillip. Sid, thank you for joining us. I mean, so far we've heard that this door plug has been redeemed. There's a number of issues at play. We know that this plane already had some warnings around the pressure gauges inside the plane. Can you just update us in terms of what is the most important plus point in understanding what went on here?
So I think it's still too early to figure out what exactly went wrong with this emergency exit blowing out. The NTSB has found the actual piece that blew out, and so they will be studying that piece to essentially understand what really went wrong with it and why it sort of failed the way it did. And in the meantime, the FAA has sort of acted pretty quickly and has grounded all MAX 9s that have this particular piece of plug on the fuselage.
I mean, is there any outcome that could kind of save Boeing in terms of preventing a crisis of confidence, or any way you shake it, this is a problem for Boeing, it's a problem for Calhoun and his turnaround plan?
It is actually a problem for Boeing, given the fact that, I mean, obviously it'll be seen how quickly it can be resolved and whether or not the issue can be addressed really easily. But it definitely is a confidence issue for Boeing, because I mean they've just come back from the MAX crashes and the subsequent grounding, and this is sort of just another bad look for the aircraft. But how quickly they can address it and how easily it can be addressed, I think that's really key to determining what the impact will be on Boeing.
I mean, there are certain moments in history which are fatalistic to certain aeroplane types. I'm thinking specifically, obviously Concorde went through a number of fatal moments. When you look at the incidents catalog for MAX, are we anywhere near some kind of a calamitous moment for this one particular type of plane with Boeing?
I think it's still too early to say. And given that the FAA has previously, in the emergency airworthiness directive that they issued over the weekend, they said it'll take between 4 and 8 hours to inspect and essentially potentially repair aircraft. I think it's still too early to say that this is going to be a sort of another massive confidence blow to the Boeing 737 MAX. At the same time, it does sort of add to the narrative that the aircraft has had issues, and essentially Boeing has to really work hard in order to be able to counter those issues and essentially deliver on its aircraft and have the plane back in service.
Weren't expectations already high for this year? Wasn't there expectation? Everyone's going to be traveling again. Everyone wants the latest Boeing plane. Surely that's got to reverse at least some of the frothiness of how much customers want Boeing planes.
At the same time, it is a duopoly, and Airbus is sold out until the end of the decade. And so Boeing really has to deliver in order for any of the growth that the aviation industry really hopes to see, and also the decarbonization that the aviation industry hopes to see happening in the next decade. And so it is really important for Boeing to get this plane right and get it sort of back in the air as quickly as possible, just so that airlines are able to offer the capacity that they need to offer and basically fly the routes that they need to fly.
Yeah, fair enough. All right, Sid, thank you so much for keeping us updated. I'm sure much more is going to come from this. So join us again. That's Sid Phillips. Thank you very much. And Manis, at the moment, shares down about 8.4% in Boeing. The drop not stopping this morning.
Yeah, I mean, I think, Danny, when you look at this, it's about confidence. If you turn up at the airport and you're told that you're going on one of these planes, which has had a series of incidences, it's about consumer confidence in the plane as well. Just to the point that you raised with Sid, and I think it's an excellent point, which is if you look at the deliveries, and it's in the story today, they were going for 580 of these 737 jetliners this year, and that's a big bump from where they were just a short time ago. So this is core to the turnaround within Boeing.
Yeah, and look, man, to your point, who among us has not sat on a plane and looked at the little safety guide in front of you and checked what plane it was after the 737 MAX first horrific accident happened? Who among us has not done that? All right, Manis, as we head to break, a quick check on your bond market. U.S. 10-year yields fall after a hot jobs report was picked over for weakness on the edges. We're also in the buy zone of 4%. That's down 2 basis points, while the sell-off continues in Europe ever so slightly, up by about a basis point for both Germany and the UK. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. Manus, the sell side has decided to go all out for Apple. I mean, not in a good way. Last week we had the Barclays and Piper Sandler downgrade. This week it's Jefferies, not a downgrade, but just warning on iPhone sales in China, saying that they're lacking, saying that Huawei was also able to reclaim back some of its customers it lost to Apple. So warning after a week where shares dropped by 6%.
Yeah, I mean, it's underperforming the S&P for 17 sessions in a row. So that is a bit brutal. By the way, this goes back to the Bloomberg scoop that, China was banning agency state firms from Beijing to Tianjin, telling their staff to go local. So let's see whether that translates into the Q1 numbers. Now, I've neither seen Oppenheimer nor Barbie. I don't know whether one should actually admit that. I was on the cross trainer yesterday. Barbie and Oppenheimer.
It's like social suicide.
Yeah. Well, of course, Oppenheimer has scooped virtually everything at the Golden Globes. It sets a precedent for the Oscars.
Yeah, and Barbie won some new category they didn't realize existed. It's basically to be like, oh, good for you. A lot of people went to go see your films. Okay, Manus, I think the weirdest thing was, have you watched The Bear? The Bear won Best TV Comedy. It's not a comedy. It like fills you with anxiety. It is not a necessarily funny show.
Well, what I was happy was about that Succession won the best dramatic TV series. I still haven't got to the end of Succession. I keep watching it on planes, but I haven't been on a plane since I came to live in America. So right now, I'm way, way, way behind. First of all, T&E is down considerably. That's one for management. And two, I haven't seen the rest of Succession.
I'm so confused that you only watch Succession on a plane. Like, get HBO Go. You live in the U.S., Manus.
Buddy, listen,
come on.
I've got 3 streaming services, right? What more do you want? Yeah. I am supporting the American telco industry, and I'm making calls on this thing overseas and not realizing it's costing a fortune.
You're just lucky I haven't spoiled the end of Succession for you, Manus. I was literally about to talk about it, but probably some of our viewers haven't seen it. So I don't know. I feel like I'm going to give you a week and then I'm going to spoil it for you. I think I need to set a hard deadline for this, Manus.
Yeah, you're not going to be that vicious for us. We got a little bit of breaking news on Sony. I believe there is a hot headline there. We'll talk about this in a moment. They're calling off their $10 billion merger with Z. That's a hot headline there.
Yep, it certainly is. We'll get more on that. We're also going to talk about Secretary of State Antony Blinken visiting the Middle East here on Bloomberg Brief.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always going to be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Welcome back to Bloomberg Brief. I'm Manus Crenny in New York.
And I'm Danny Berger in London. Here's what you need to know. The 737 MAX grounding goes global. Alaska Airlines mid-flight blowout puts Boeing's comeback plan in jeopardy. Traders are betting on a 2024 bond rally. They're unfazed by a recent pullback, seeing it as a chance to seize on elevated yields before the Fed cuts start coming. Again, after that rally, too, there is some easing in the shutdown expectations for D.C. We're going to have the latest from the White House in just moments. At the meantime, we are in the buy zone for your 10-year. We are buying this morning, even after a higher than expected jobs number. There were concerns around the edges, the quality of that strength in the jobs market. Either way, perhaps the fact that we got near 4.1% was enough of a reason to buy. Yields lower by about 2 basis points in the U.S. Bloomberg Dollar Spot also comes off the best week since 2011. Unfortunate time for traders who just loaded up on the most bearish bets since August. Higher again, the Bloomberg Dollar Spot this morning. Meanwhile, NYMEX crude, Manus, we're going to speak with Francisco Blanche of Bank of America very shortly. Prices lower this morning, down by 2.33% after Saudi pulled back their prices by about $2 a barrel. That was more than expected, putting back into focus the risks to this oil market.
Yeah, the debate for that bond market is whether you just spend the rest of the year coupon clipping at the very short end on T-bills and short-dated notes, or do you pick up duration? Rick Reeder was very, very hungry to find a higher diving board, and that essentially is that kind of level that we're at in the bond market. Your one corporate story that is pervasive, it's touching everything in the supply chain as well as itself, is Boeing. The 737 MAX, the plug that came out over the weekend, the flight returned safely, but Boeing down 8.55%. The entire fleet of Alaska Air is on the ground. United Airlines has 79 of these planes. And the operator that fitted the plug, Spirit Aerospace, is down by 19.35%. The voice box has been recovered. It is unusable. The plug has been recovered. The operation of investigation will go on. So you've had the most brutal start to risk in 20 years. What do you do? What do you do? Do you load up again on cash? Do you pick up 5.25 in cash? Well, the money flowed in. $123 billion went into cash funds as opposed to equity funds, just over $70 billion. So again, the trade is cash, short-end T-bills, money markets versus risk at the moment. The question is, what will the earnings deliver? Goldman Sachs go for a bullish call on the earnings per share, $237. They say that will save the day. Stock 600 down by 0.2%. The oil component is the laggard there, down 1.83%. Why? Because the Saudis are cutting the price of crude, as you said, Danny, to the east by $2. Is that a demand softness? Either way, oil stocks are under pressure in Europe. And then the Hang Seng, you don't have any clarity on what they're going to do with gaming. You don't have any clarity on what the actual full last ruling will be on technology in China. In absentia of something definitive, why would you have that risk? The Hang Seng down 1.8% at the close of business. That is the lowest close since 2022. If you had money trapped in Hang Seng, we've also got a headline out there that China lifts its stock selling ban for mutual funds. That was from Reuters. So to a certain extent, that may also explain some of the flow. Danny.
Manus, the idea of there is an absentia of conviction, I think that was one of the most interesting things that we heard from Elsa Lingos of RBC just about 15 minutes ago, that her clients don't have conviction. It's not that they're fearful, they just kind of have no idea where things are going. And everyone was really burned last year with wrong way bets. It's interesting that there's this idea of paralysis among investors to start the year.
Yeah, I mean, the flow. Look, a lot of people, I think the other big cause you said, a lot of people are going to be disappointed in dollar yen. I mean, the dollar itself had the best start since 2011. So that is risk. That is about risk off. What do you want in your back pocket? You want some dollars in your back pocket relative to everything else. So the dollar will still be king dollar in a risk off environment, and risk off will probably trump a rate cutting narrative. Danny.
Well, let's be clear, the other big risk is geopolitics, it's politics, it's D.C. Now, we have a government shutdown deadline looming, and with that, Congress has, Manis, announced a spending cap deal. President Biden praised the deal, saying the bipartisan funding framework congressional leaders have reached moves us one step closer to preventing a needless government shutdown and protecting important national priorities. Joining us now is Bloomberg's Kevin Whitelaw. So, Kevin, as Biden says, we move closer, but how close are we at this point to preventing a full government shutdown?
Well, this was a necessary step, but it was probably the easiest step when it comes to sort of averting this shutdown. They've got about until the 19th of January to at least deal with the first deadline. That's a sort of, several different government agencies lapsed then, a second deadline in February. So they have some room to move forward on this. Problem is, it doesn't really deal with the two biggest hot-button issues related to this funding dispute. One is emergency funding for border and migration issues, and the second is aid for Ukraine, which is something that the White House has said is an absolute essential in this next package.
Good to see you this morning. I mean, the first deadline is coming quite quickly, isn't it? So there's very, very little time to, I suppose, separate things out in terms of the clarity out there and operate. It's unclear if there's enough GOP support for another stopgap, isn't it?
That's right. They've basically said they're not really willing to do another stopgap. There is some potential they could make a quick deal on at least a couple of the agencies that are that do expire in January, and then they come back in February and try to deal with the border and Ukraine. But obviously, for Ukraine, that's going to be a very awkward moment, given that aid has lapsed so far in both from the U.S. and from the European Union.
Does there seem to be any movement on those hot and button issues, not just Ukraine, but the border too?
I mean, no. The basic answer is no. There may be deals to have in the Senate, but the real problem is going to be sort of getting this through the House. We have a new speaker. It's not really clear how he's going to approach this issue or any others, really. And it's not also clear how much flexibility he has. The House has an incredibly slim Republican majority right now. It's only essentially an effective two-seat majority, given a couple resignations recently. And so there's just very, very, very little room for error and a lot of ability for just a couple of people to sort of gum things up. So it's going to get pretty hairy over the next week or two.
The headlines of relief over the weekend were perhaps a little bit front-running all the potential snags that can come into play. And as you say, the aid for Ukraine is just one of those issues. Kevin, thank you very much. We're counting down to January the 20th. Will it go according to plan? Well, the U.S. Secretary of State, Antony Blinken, warns that the Israel-Hamas war could, quote, spill over into a full-blown regional conflict.
This is a moment of profound tension in the region. This is a conflict that could easily metastasize, causing even more insecurity and even more suffering.
A fairly damning view of the state of play in the Middle East. Let's bring in our Bloomberg opinion columnist, Bobby Ghosh. Bobby, the language that Blinken is using is really just a reality of where we are. This, he says, could metastasize into something much bigger. They really are losing on multiple fronts now. Public opinion, credibility in terms of negotiator, and they have very little lean over Netanyahu, is how it would appear.
That is certainly the case. And the fact that he's saying this in the Middle East on this grand tour, his fourth circuit of the Middle East, in a place where people will turn around and say, yeah, tell us something we don't know. If anybody knows the risks of this metastasization of the crisis, it is the people who live in the middle of it. So he's not telling people there anything they don't know. I'm hoping that in private conversations he's going farther than that, because they're going to turn around and say, yeah, what are you going to do about it? What are you doing about it? You're the people. The United States is the country with the greatest leverage over Israel. What are you doing with that leverage? And as yet, the Biden administration has had no answers to that question. So I don't think the Secretary of State going and saying, oh, where the waters are rising and we're getting deeper and deeper into this is really going to cut the mustard with anybody. Sorry for mangling my metaphors there.
No problem at all, Bobby. Look, in terms of what a wider conflict would look like, I mean, at first blush, you say, okay, it's Israel, the West, versus Gaza, versus Hamas, versus Iran. But what does the emergence of the Islamic State taking responsibility for the Iran mean for what a conflict would actually look like and the type of players involved in it?
So the arrival of the Islamic State on the stage at this moment sort of greatly complicates things for everybody. For Iran, it takes attention away from Israel, and now they have to deal with this huge new crisis. The Islamic State has not been able to mount an attack like this so deep into Iran ever. And nearly 100 people died. It exposes incompetence in the Iranian security establishment, and the Iranian state is nothing if it's not a security establishment. So it is a domestic crisis that takes attention away from its confrontation with Israel. Now, that confrontation with Israel is not direct, it is indirect. Iran uses proxies. So there's Hamas in Palestine, there's Hezbollah in Lebanon, and most recently, the Houthis in Yemen, who are gumming up the Red Sea. So Iran is now having to deal with multiple crises across the board. That's not really going to change the situation in the Red Sea or in Gaza. So for the rest of the world, those problems don't go away.
Given the internal crisis of security that Iran is now facing with the ISIS attack, ISIS claiming responsibility for the attack, killing 100 people, what does that do to the wider geopolitical escalation? In other words, our own backyard is looking pretty dangerous at the moment. Mm-hmm. If we go for full escalation with the Houthis or indeed the Hezbollah, do you think the things domestically can temper how far Iran will push it with the proxies, or is that just wishful thinking?
I'm afraid that that's not how Iran operates. The whole point of using proxies is that it takes pressure away from Tehran itself. The proxies have a certain amount of agency and independence.
They add the pressure to the U.S.
They add pressure to Israel, to the U.S. Once they've been launched, they've been launched. Iran's direct day-to-day role in controlling how much the proxies do is limited. But at the same time, now Iran has to deal with the possibility of a new front. It looks like this ISIS strike came out of Afghanistan. That puts Iran in confrontation with the Taliban. Mm-hmm. The last time that happened was in 1998, and the two countries almost went to war. Now you have a new crisis. The Taliban has a complicated relationship, shall we say, with ISIS. On the one hand, they have certain ideologies in common, but they also have sort of rivalries over control of parts of Afghanistan. So this is a time when, to go back to where we started, Secretary Blinken will be hearing from all his Middle Eastern interlocutors saying, look, this thing has become insanely more complicated. The easiest way to simplify this is to start with a ceasefire in Israel. You're the people, the United States, you're the people who can make that happen. What are you doing about it? And that's going to be the number one, I suspect, demand or request from every interaction that he has on this trip.
Hey, Bobby, great stuff. We really appreciate you joining us this morning. That's Bobby Ghosh of Bloomberg Opinion. Coming up, speaking of geopolitical risk, we're going to talk about the impact on oil with Francisco Blanch of Bank of America next, here on Bloomberg Brief.
politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but this is, my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it? Peacock.
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and where the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Oil's dropping this morning. Saudi Arabia is cutting its official selling prices to all regions. Joining us now is Francisco Blanche, head of global commodities derivatives at Bank of America Global Research. Francisco, here we go. We go into this asphyxiation mode. The Saudis are cutting prices by $2. Demand must be in the toilet. But of course, this is more about making sure that you hold on to your market share rather than the implosion of demand. Correct me? Inspire me, inform me. Good morning.
Hey, good morning. Thanks for having me. There's a number of things going on. I think there's definitely a lot of supply. We've had record levels of production in the U.S. If you look at total liquids, we are now breaking 21 million barrels a day of crude oil, NGLs, biofuels in America. So that's kind of twice what Saudi or Russia produce. So America has become bigger than the combination of both at this stage, right? So that's one part of it. I think the other element of it is that we've had a lot of supply from Iran, where we've seen more lax enforcement of sanctions there. Exports are running in close to 1.5 million barrels a day. And of course, there's the Venezuelan story with the 6-month reprieve on U.S. sanctions. So I think you've had a lot of supply. And as you pointed out, demand is decelerating. We've had a very, very sharp increase in interest rates, which has really been slowing things down. Maybe not so much in the labor market in the U.S. as we saw on Friday, but certainly across the world, high interest rates are just putting some pressure on the economy and slowing it down. That's kind of our baseline for the year: slower demand growth. So that combination is I think, what's kind of pulling prices lower. And we just cut our Brent forecast for the year to 80, average WTI 75.
Francisco, is it fair then that you're not surprised we don't have more of a war risk premium built into this market, that really hasn't moved the needle?
Well, so here's the thing. I mean, when thinking about our forecasts over the last week or so, I've been really concerned about the geopolitics. And since we had the OPEC meeting in early December, prices have been generally trending a little higher. We dipped all the way to 70 or so, and then we climbed all the way back to almost $79 a barrel as of Friday on Brent, and here we are pulling back again a bit. I do think that geopolitics are a major issue, but it's something really hard to price for markets because, as we've seen, the U.S. Navy is quite involved trying to keep the sea routes open in the Red Sea. with more or less success. And then, of course, we are in the midst of a very explosive situation across the Middle East, and it's frankly difficult to say which way things will go. But one thing that worries us in particular is that the U.S. and NATO are already involved in Ukraine and Israel. So it's difficult to add a third front here. And if you are an autocrat somewhere in the world, you might see this as a window of opportunity. And that could be a big surprise in markets this year.
And that seems to be the building consensus, which is an underpricing of war premium by $12 is what Rapidan told us last week. Francisco, I want to get a sense from you then, what does OPEC do? You talk about U.S. supply and global supply, the U.S. being 21 million barrels equivalent in total. They can't control American supply or the Permian Basin, and we're surprised by the supply that's coming back in the Permian. How much pressure will OPEC Plus feel now to extend their cuts or to do something more? Is there going to be pressure to do more than the unilateral cuts that we already have?
Well, so I think OPEC is definitely part of the equation, is a key part of the equation here. The Saudis, I have a hard time seeing them cutting further. Remember, they've been at 9 million barrels a day now for 8 months or so. And in reality, that's the lowest level of production since 2011, if you exclude the COVID period. So Saudi's already producing relatively little oil compared to history, and it's really up to others, Russia and the UAE, Iraq, Kuwait, to join in with production reductions. And I think what the market got nervous about was the exit of Angola and the potential fractures, internal fractures that could lead to in OPEC. OPEC spent the last month trying to convince everybody that Congo is still in there, and Equatorial Guinea and Nigeria, of course, are all committed to OPEC. But in reality, I mean, I think the pressure of U.S. shale supply has been a big surprise to the market, and it's really unclear what is the main reason why we're seeing so much shale supply. There's a range of reasons. But
well,
certainly,
Francisco, can I jump in here? Because when it comes to the U.S. supply, as you write in your note, it's a year where it's an election for more than half the world's population, and energy matters. Again, that's your word. So what happens to energy policy in such a monumental year like 2024? About a minute left here, Francisco.
Well, I mentioned it at the very beginning. The U.S. government, the Biden administration has done a really good job at trying to push oil prices lower, either through the price cap with Russia, the relaxed sanctions on Iran, going out to Venezuela, really looking the other way when U.S. investment and production has continued to increase. And ultimately, that's the hard part for OPEC, right? It's just we haven't seen that plateauing, and ultimately, if there is one thing that Biden needs to focus on, is making sure he delivers a positive increase in real incomes in America as we go into the election, because that's the one thing that's been dragging him down in the polls. Americans are poorer today during the Biden presidency than they've been probably for decades in terms of relative increases in real incomes, because inflation took away so much of the labor gain of the nominal labor gain. So that's the issue, and I think there'll be a lot of effort to make sure energy prices don't go up.
We're going to have to end it there. Thank you so much. I'm worried about all these risks of volatility when we're already having a day to start the year. Oil down more than 2%. Francisco Blanch of Bank of America, thank you so much for joining us. This is Bloomberg.
maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
What does it take to be a great surgeon?
This may sound trite. Perseverance, resilience, in practical terms, being able to take a blow and not having it become a permanent deformity, and grit.
This is Bloomberg Brief. I'm Danny Berger in London alongside Manish Kranny in New York. All right, let's get you set up for your Monday trading day. Here's a look at what's ahead, not just Monday, the whole week. The SEC's deadline to decide on the first spot Bitcoin ETF application will come on Wednesday after months of speculation. Then the latest read on U.S. inflation, plus jobless claims on Thursday, followed by PPI Friday. Then bank earnings kick off. Bank of America, JP Morgan, Wells Fargo, and Citi all on Friday. But for now, Manish, the corporate focus is squarely on Boeing and the fallout of the plug coming out of that Alaska airplane.
Yeah, we've now got an additional grounding. Indonesia will temporarily ground their 737-9 Maxes, Danny. So you're looking at United here at 79. Alaska Air has grounded all of their fleet. It's going to take 3 to 4 hours, is what they're saying, isn't it, Danny, to check these plugs on the planes? But Boeing down 9%. Danny.
Yeah, and the speed at which they can address this is going to be hugely important for Boeing in a year that was supposed to be a turnaround year. All right, that's it for Bloomberg Brief. Surveillance up ahead.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, a significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
We've definitely been in somewhat of a rolling recession, but we could all agree we have not been in a labor market recession.
These kinds of numbers, you'd really have to question whether the economy is slowing down materially at all.
Underneath that surface, we are seeing some signs of concerns that make us worried about the sustainability of the jobs expansion.
To get inflation down to 2%, the only way to do that sustainably is have a big boom in productivity growth of 2 to 3%.
You don't have to have an economic collapse to get the inflation rate lower.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Let's get your trading week started live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market on the S&P slightly negative after 9 weeks of gains on the S&P 500. We deliver a week of losses to kick off 2024. The next stop, TK CPI later this week. Then on to bank earnings on Friday.
Yeah, which is more important, the FT has that huge headline this morning talking about challenges to major U.S. banks coming up. So I'm going to put an extra weight there on bank earnings, the first shot from JP Morgan. But on inflation, I just think there's a massive mystery. What a joy to have Lori Calvasina coming up with us with some real later in 2024 optimism.
RBC's chief equity market strategist just around the corner. Bramo, I've read note after note after note asking one question. What can go wrong? Julian Emmanuel of Evercore, nothing can go wrong optimism is at risk in the first half of 24.
And the risk, at least in the first week, was this idea that this over-optimism perhaps in Fed rate cuts that people were foreseeing. Friday was really interesting. The data was all over the place. We got a non-farm payrolls report that seemed to be good on its face. Then we got ISM services data that looked really weak on its face. And everyone went with the weakness, which means that they still have optimism in rate cuts that seems to be pervading a lot of the optimism in equities.
You're dead on. Michael Feroli wrote at about 7 p.m. on Friday evening that he thought all in all it was constructive data. But I do take your point. I thought David Rosenberg was brilliant parsing out what Dr. Wong of Bloomberg, Anna Wong, was talking about, which is the birth-death adjustment. And you adjust to a huge number, like 400,000 jobs disappear for 2023.
Speaking of what can go wrong when you board a 737 MAX 9 jet? Boeing in the pre-market, down and down hard. Lisa, can you imagine being on this Alaska Air flight over the weekend? Just brutal. The stock is lower by 9%.
I'm just grateful, I know a lot of people are, that nobody was sitting right next to this plug that they found in someone's backyard. It's a 63-pound thing that blew out. Here are the questions. Is this a manufacturing problem? Is this an actual product problem? How many MAX 737 MAX 9s are going to get sort of benched for the foreseeable future? But what does it say about Boeing's competitive advantage at a time where they're still in this heated battle with Airbus? Airbus shares up higher today.
And it's incremental. John and I were talking about this before we went to air, but you go back to Seattle, to Chicago, to somewhere outside Washington, and it's just been this thing, John, and that thing, the placement of the engines relative to the wing and on, yet Airbus just seemed, and I could be wrong on this, we're going to talk to experts here on the show today, Airbus just continues to move forward, and there's a real distinction.
One of those experts coming up, George Ferguson of Bloomberg Intelligence, later this hour. Don't miss that. As we kick off your Monday morning, good morning. Here are the scores in financial markets, starting with the equity market on the S&P. We're negative again by 0.25%. Kicking off this week a little bit softer. Yields coming in almost a basis point, 4.0361%. But Lisa, I'm with you. On the surface of things, payrolls look pretty decent. Beneath the surface, some cracks. Then the ISM services came out, and the employment sub-index of that particular index was dreadful.
It fell the most into the lowest that we've seen going back to the heart of the pandemic in 2020. So here's the question. Will we get confirmation of the disinflation narrative on Thursday? And that really will be the key economic data point we do get this week. CPI coming in on Thursday. We have seen that steady decline. Do we see that continue given some of the pressures that people talk about that could reinflate later on? Of course, we also get PPI on Friday. Here's what I find interesting. We get a bunch of Treasury auctions this week. I'm actually really focused on this at a time where the U.S. total public debt that's been trading in the system has doubled since 2014. Include 3-year notes tomorrow, $37 billion of 10-year notes on Wednesday, and 30-year notes, $21 billion of those on Thursday, and then corporate earnings on Friday. JP Morgan, as well as Bank of America and Delta. It should be kind of an interesting, diverse read on where we are and how to go forward.
Lots of data, lots of earnings coming right up. Lisa, thank you. Starting the conversation this morning with Laurie Cavacina, the head of US Equity Strategy at RBC Capital Markets. Laurie, good morning to you. This line jumped out from your most recent note. The weak start in January is just the beginning of a phase of turbulence. How concerned are you about that?
Well, look, John, I was talking to one of my traders last week, and we were discussing the CFTC data we're starting to see that's really just looking very, very stretched. And I said, this looks scary. And I think we need to keep in mind that sentiment has been oscillating very, very quickly over the last 6 months. So this isn't necessarily something that has to derail a call for the year, maybe dampen enthusiasm just a little bit. But really what we've started to see the CFTC data on institutional investor positioning line up with what we're seeing on the retail survey for AAII. And both are looking very, very stretched right now. I think there are a number of things that could come in and trip this market up a bit, but usually it's something the market doesn't see coming. Right. So I think we need to focus here on the idea that sentiment itself just got carried away at the end of last year.
Laurie, Mike Wilson, who's been cautious on the markets over at Morgan Stanley, has a brilliant paragraph hearkening to nominal growth could be the surprise this year. It's one of his more optimistic constructions of where we're heading in the mystery of 2024. What do mid-caps and small caps do if we get legitimate animal spirit, we get legitimate nominal GDP?
So what we've typically seen is that when GDP, and we tend to look at it in real terms as opposed to nominal terms, but if you're looking at real GDP above 2.6%, and 2.6% has been the long-term average since the late 70s, we typically see that small caps and value stocks outperform in that environment. When GDP is running cool below trend, that's when large caps and growth tend to outperform. So it goes back to this question of leadership and rotation in the market. We've got GDP forecasts sitting at about 1.3% this year. That's up from about 1% back in November. So they're moving in the right direction. But if we really want to get a lasting, sustainable, durable leadership rotation away from the mega cap growth stocks and into basically everything else in the market, you need to see GDP expectations move up quite a bit more from where they are right now.
I mean, okay, well, the GDP's got to come up. I get that. But what do we do right now? I mean, are you deploying cash to small, they pulled back. Are you deploying cash this morning to small caps and mid caps?
So I still like them. I don't like them quite as much as I did, say 4 or 5 weeks ago when we last spoke. Right. One of the things we've seen is that in addition to sentiment getting a little frothy at the broader market, if you look at small cap positioning on the CFTC data, we're at an important crossroads. We're basically at the 3-year highs, but we're not at all-time highs. So we're going to know pretty soon whether or not small caps are really able to power through and take things up another leg. We're also still seeing that small caps look very cheap relative to large. But if you look at a Russell 2000 forward PE, it's back to average. Now, that's not usually where things top out at, but it is telling us that maybe we have made a lot of the easy money in small caps already. So do I like them? Yes. Do I like them as much as I did a month ago? Not quite.
This sounds all kind of negative, and yet you just upgraded your forecast for year-end 2024 to 51.50. That's a 10% upside from here. If it's not small caps, what leads?
So I think that the value stocks in particular are something to keep an eye on from here. We've seen the financials act quite well. Now I'm actually a little bit nervous about that heading into reporting season, but we've started to see some more favorable views emerge on the industrials as well. So I think we're going to get some interesting clues in this reporting season, but I do think sector composition is very, very tough right now. I do think, Lisa, if you kind of go back to our target, we were anticipating about a 10% return when we put that target out in mid-November. We were on sort of the earlier side of putting targets out. We trued up all of our, sort of models for year end. We did have this big ferocious run in December. And now where we're sitting today, even with this upgrade on the 5150, it's only about an 8% return on the year. So it's not necessarily getting more bullish. It's just kind of truing up our model for the year ahead based on the moves that we had in December.
You mentioned banks, and I find this interesting. How important is Friday going to be as JP Morgan kicks off earnings to give a sense of what the landscape is for banks, or is it just JP Morgan's world and everybody else is living in it?
So I think they all matter, Lisa. You know, I don't think it's just any one particular bank. I know some get more attention than others, especially the ones that come at the beginning. But I tell you what I think is important for the banks is, one, are those sort of strong numbers that we've seen in terms of performance going to hold up? Sometimes we do see, you know, sort of the banks give back when they've had a strong lead into reporting season. So are the numbers going to be good enough to really justify sustaining some of the better trends we've seen recently? I think that's one thing. But also, I think for someone like me who's not a specialist in the financials, we really go in and look at the financials for clues on the plumbing of the economy, on the health of the consumer. And I think that's probably going to be the most important thing coming out of the next, you know, kind of week or so with those banks' earnings.
The real headline over the weekend coming into this morning, a positive surprise in Washington, D.C. Laurie, this story, congressional leaders announcing a deal on top-line spending for the current fiscal year. Laurie, I was speaking to Amy Wu Silverman in the last week, and we talked about your line, that talking about politics, the election this year specifically, is like staring at the sun. Is it that bad this year for you and the team?
Yeah, it's pretty awful, John. I mean, it's interesting. That line comes from my conversations with U.S.-based investors who are like, okay, it's time to write our outlooks. You know, this is kind of thinking back the last month or so. You know, what do we say about this? And we kind of walk people through data. We get through it quickly, and then we move on. European and Canadian investors, I mean, you could easily spend a whole meeting on this. It's like a spectator sport for them at this point. But I do think it's a major source of uncertainty. And I'll tell you what, it was interesting to me last week when I was working through some of the data we saw at the end of the year and the beginning of this year, is that you are starting to see money flows improve or turn positive to Japan, to emerging markets, to China, and to Europe. Right. U.S. flows are still holding up, but we are starting to see non-U.S. geographies really attract, you know, some better flows. And I think part of that has to do with the election based on what I'm hearing from the non-U.S. investors.
Laurie, answer a question for RBC clients watching, listening, which is, geez, we started the year weak, and that signals a terrible year ahead. Is there any validity to that emotion?
So I tend to be very skeptical of, you know, these seasonal, you know, kind of studies. Whenever we do this on this day, we do this for the rest of the week. I think that those kinds of studies can be massaged, frankly, you know, change your starting point to show whatever you want to show. I've been actually looking at seasonality over the last 10 years. We've had some good ones, we've had some stinkers, but we have seen that January has been pretty much a mixed bag. There have been some difficult ones if you especially look over the last 5 years. So I would be sort of keeping with the recent seasonality to have a rough start to the year. Does that necessarily tell you that you have to run away for the rest of the year? I don't think so. And I go back to what we talked about at the top of the show. Sentiment has been oscillating so quickly. We were basically overbought in August, oversold in November, overbought in December again, and that all round tripped off of oversold conditions last October and post SVB. So I think that sentiment helps you tactically. I don't think you can use it that much to make a really kind of longer term view at this point.
Laurie, wonderful to get your views this morning. Thanks for being with us. Laurie Calvastina there of RBC Capital Markets, looking for 5150 year end on the S&P 500. That's the longer term story. In the near term, seeing reason for more turbulence from January and potentially beyond. We saw this from JP Morgan's Mislav Matejka this morning, Lisa. Stretch positioning, complacent sentiment. Not the only ones who think that.
And this seems to be sort of building on this idea that things got overbought in November and December, and that this is basically the hangover from that. Key question is, ultimately, it's going to come down to the economy. That's what Laurie Calvastina was saying, which is the reason why earnings are going to be important. And CPI is going to be important since the data that we got on Friday was kind of confusing.
And the politics decent. Is that good news over the weekend? Who for?
Okay, I'm really skeptical. I have to be honest. I read this and I was thinking, okay, headline number. That's where the easy stuff happens, right?
Sure.
They can agree to $1.7 trillion. You look under the hood. Republican, more fringe Republicans are criticizing this and saying that this is absolutely a non-starter. Democrats are coming out and saying, we're not concerned. I mean, this is where the details have to come into play. And the details are not always where the mess comes into play.
My take over the weekend was, and I'm looking at the SPX chart here on the Bloomberg. I do look at the Standard & Poor's 500, John, once a year. Coming out of, 2022, it's up and away, and we've had a horrific correction of 1.6%. And the hysterics I find just fascinating. I don't have an opinion, bull, bear, whatever. That's not our job.
Sure.
But the level of hysterics on a dramatic 1.6% pullback, I'm just baffled.
We'll talk about the hysterics in Washington, D.C. in just a moment. Isaac Boltanski's going to join us shortly from BTIG. Remember when China seemingly lost its defense minister and everyone looked down their nose at China and disappearing ministers? Oof. What's happened to the defense secretary in the United States of America?
Elective surgery? Don't you want to know what it is?
Apparently, we don't know.
No, we don't know when he's going to come back.
We'll try and find out. From New York City this morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Next week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Coverage begins next week, only on Bloomberg Television and Radio.
We've been negotiating in good faith all through the holidays, every day over the holidays, except for Christmas, on the top line numbers. Congress has a responsibility. We have the power of the purse, of course, and we have to be good stewards of precious taxpayer resources. We cannot continue to borrow money to spend it, and so reducing non-defense discretionary spending must be a priority of Congress.
That was House Speaker Mike Johnson on CBS yesterday, just hours before an announcement that a deal was reached on top-line spending in Congress, easing concerns of a looming U.S. government shutdown. That is some positive news this morning. From New York City, good morning. Here's the broader price action for you. Pulling back on the S&P 500, negative by just 0.1%. Yields lower by a single basis point, 4.0342% on a 10-year. The march towards CPI on Thursday, Tom, and earnings from JP Morgan and Bank of America this Friday.
What's in a real yield? 1.80%. Had a little bit higher real yield in the festivities last week. It'll be interesting to see off CPI where that is into those bank earnings. Right to it right now on your Washington. Isaac Boltanski joins Director of Policy Research at BTIG. Isaac, I got to go with the lead headline, which is, I guess, all clear in Congress. We've actually passed a budget. Is that true?
Absolutely not. That couldn't be farther from the truth. Look, we now have top-line agreement on what we can spend for the fiscal year. That's great. It's wonderful. And that just means that the hard work gets to begin now. You know, I think there are 2 points to highlight. Number one is you've got to notice how angry the far right flank of the House GOP is this morning. we need to understand that the Speaker Johnson, is operating with no room for error, and he will almost certainly need Democratic support to pass his bill. That's something that former Speaker McCarthy didn't want to do, ended up doing, and then got thrown out from the speakership. And then number two is there are so many points of departure between Democrats and Republicans when it comes to the specifics of the spending agreement. There are upwards of 40 different poison pills some groups have counted that could shut down the talks around this. So, look, I think that the temperature has been taken down. The risk of a shutdown is slightly lower this morning, but there's still a lot of work that needs to be done over the next 11 days.
So what's the primary to-do list arcing over the next 11 days?
Yeah, so what I'm looking at is we have to get movement on the other issues around the spending bill. So it's good that we've got this, and now I think the appropriators will slink back into their offices, and you'll see some backroom negotiation and maybe not much on that. I'm interested in the border deal, Tom, because we've got to keep in mind the spending agreement is just part of this 3D chess game that we have going on. The other part is the supplemental spending measures. And here I'm talking about border security, and then, of course, funding for Taiwan, Ukraine, and Israel. That's the other part of it. And the link to all of that is the border security deal that we're now expecting to come later this week.
You mentioned the international security concerns, big foreign policy issues. We've got to talk about the curious case of the missing defense secretary. Now, Isaac, first of all, we wish him all a speedy recovery. From what none of us seem to know, the details, according to our reporting, Lloyd Austin underwent an elective procedure in late December, didn't tell his staff they should notify others when he was admitted to Walter Reed Medical Center on New Year's Day after experiencing severe pain. At the same time, his chief of staff was ill with the flu and failed to notify anyone. The person said that we've been speaking to, according to our source, that Austin's military aide quickly put Deputy Secretary of Defense Kathleen Hicks in charge of running the Pentagon, although she wasn't informed of the reason for this decision. And the president, seemingly for days, didn't have a clue, Isaac, what was going on. What is going on?
This is one of the weirder stories you're going to come across in the Biden administration, which by and large has been pretty tame when it comes to these personnel stories, especially compared to the previous 4 years. But it's deeply unsettling. Right, I know that the secretary is an incredibly incredibly private person, and that this is something that all of his staff have highlighted about him. But you don't get to be this private when you're sixth in line in the presidential line of succession. And so, look, this is deeply unsettling, especially given that transparency is one of the pillars of our political system. But ultimately, this too shall pass. And I think it just reminds you of some of the stories of personnel volatility that we saw during the Trump administration, which is going to be one of the campaign trail considerations as well.
You said volatility. Do you expect him to step down?
No, look, I think that depending on health, of course, that he is going to be fine. I mean, the president has not made any comment that suggests that the defense secretary will leave here. So I think he will stay. I wouldn't be surprised if he's replaced if President Biden does win re-election, though. I think this is the type of thing that doesn't get you reappointed.
Well, this raises a question, though, in general about foreign policy and also the platform for President Biden going forward. There were a list of asks that people are talking about his new platform, all of which are going to get rejected and are dead in the water. Is he going to basically be running on the anti-Trump candidacy once again at a time when Trump is consolidating a lot of popular support?
Yeah, look, I mean, there's obviously, you've heard that line 1,000 times, that you campaign in poetry, but you govern in prose. I don't think anyone's going to like the poetry we see from the campaign trail this time around. It is truly going to be a fear-driven campaign. It is fear of the other side. It is fear of reversal. It is fear of retribution. I don't think that we're going to see much hope and excitement coming from the campaign trail over the next few months.
Isaac, you know the polarity of the states with Ohio and Ohio Wesleyan. I'm absolutely fascinating of the polarity in the Iowa caucuses. What is the distinctive tension as we begin the political season in Iowa?
I mean, look, presidential primaries are about retail politics, and they're about personal preference more so than any national poll could ever understand. And then when we think about Iowa, we've got to think about President Trump having a 32-point lead. And we've got to think about also, and I think this is important, Tom, DeSantis went all in on Iowa. This is it for him. And if he comes in second and loses by 30 points, which the polls are suggesting, pretty hard to imagine him being considered a serious contender going into New Hampshire, where he's clearly third and far behind Haley. And so really, this is, to me, Iowa is a litmus test for the DeSantis campaign. If he loses as badly as it looks, I think that his campaign, which has already been floundering, will effectively be over. And it's really a question then of how strongly Nikki Haley can look in New Hampshire a week later.
But to that point, Isaac, if he loses and he has to drop out, who does he back? Where do those votes go?
Look, I think it will be incredibly difficult for him to back anyone. I think that he will remain in the background. My bet, though, is that those votes actually split somewhat to Haley and the rest stay home for the primary. But my point to clients is Trump is going to be the nominee. That is very clear right now. He is the likely nominee. Those votes, when we're trying to figure out where they're going to him in the general election. And so that's the important point here. There's still so many clients and so many people in D.C. who don't want it to be Trump v. Biden. And I understand that. But all indications are it's Trump v. Biden. And that's what the market and D.C. folks need to start wrapping their heads around when we think about the politics and the policy of it all.
Isaac, thank you, sir. Isaac Boltanski there of BRTG. The politics and the policy. I think we've got to pick up on that point. Bramo, so much talk of politics, very little around policy. How many conversations have you heard in the last few months about what the next White House looks like and what kind of policies it's going to have?
Zero. And I was actually reading an article about what some of the policies are that Biden's putting forward, which is basically what was left on the cutting table from a lot of the Build Back America Better and all of these other types of programs, none of which are going to see the light of day, which raises this question, is it going to just be this dark, miserable campaign of anger and finger pointing and big catastrophic thoughts? I mean, that's basically what we heard from Isaac Boltanski, happy 2024. But that seems to be where we're at right now.
But that's American history. I think a reading of not all, but many campaigns is a huge bitterness. JFK, Nixon 60, going back to alien sedition, 1802, 1804. This is the normal process to see this kind of debate and anger.
This feels that normal to you?
This feels that normal to me,
okay.
Yes.
Do you remember Libby Cantrell? She said her clients are asking her, but isn't it going to be Jamie Dimon or Oprah Winfrey? And she had to write, it's not going to be Jamie Dimon.
She wrote that.
That's kind of what Isaac was saying as well.
Yes.
Equity futures on the S&P slightly negative from New York City. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears. Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Stocks on the S&P 500 look a little something like this. Equity futures negative here on the S&P were down by 0.16%. On the Nasdaq down by 0.1. 9 weeks of gains on the S&P 500. It was the longest weekly winning streak going back to 2004. Last week, we snapped that. This from Mike Wilson of Morgan Stanley, asking the right questions. The question is whether this rally at year-end was simply a year-end short squeeze or a sign that the macro fundamentals are finally about to improve in a sustainable manner. At least the data on Friday did not speak to the latter.
Which is the reason why people are really looking to CPI, and we heard the same kind of talk from Lori Calvasino. What was interesting is that yet last week we saw the NASDAQ and the Russell 2000 both underperform. This idea that it's both rate cutting concerns as well as concerns about economic growth.
They pulled back for what, the first time in 9 weeks? They're allowed to pull back. It's normal. And to me, the hysteria right now about this is absolutely original. It's like we're addicted to up, up, and away in my beautiful balloon.
Am I being hysterical about this?
Not at all.
No, I didn't say you are.
Okay.
No, I'm not saying you are.
Sure.
The zeitgeist this weekend was, OMG, it's all over, we're all going to die. That was the zeitgeist this weekend.
That wasn't what I picked up on. But
really, what'd you see? More
I just
optimism?
think people are asking what could go wrong after a massive run-up in stocks at year-end and over the last year. In fact, we've said it a few times. The fact that we've had the first weekly loss since October doesn't tell you how bad last week was. It tells you how great the last couple of months have been. Yeah. November, December, very powerful. Earnings the next stop for many of you I know, JP Morgan, Bank of America, coming this Friday. Looking at the bond market, 2-year, 10-year, 30-year, yields look like this, lower by a single basis point on a 10-year, 4.03% on a 10-year yield. Be 2-year, 4.3746. Just this tug of war between payrolls looking good on the surface, Elisa, and then beneath the surface some cracks and an ISM services read which was just not a great read at all.
And all these people who came out and said all the data has been really funky and you can't really trust a lot of it. So they're put this together, and that's the reason why people are looking to CPI to kind of clear things up. The trouble is, at tipping points,
was going to clear things
you know, exactly. But that's my point. You think that you get some clarity, but at tipping points you don't. And so how do you know which data, as you were asking last week, is going to be the important kind of guide to focus on?
Anna Wong of Bloomberg Economics, there was a drop in labour participation, more temp workers unable to find jobs, more people taking part-time work for economic reasons, a decline in working hours. Tom, they're the cracks beneath the surface of a headline payrolls number that was pretty decent.
There are cracks there, and a really important one is a run rate of GDP. There's some Atlanta GDP 2-ish going on out there, but a lot of other people are trying to a lower statistic.
Let's play a game. Foreign exchange, the euro. Guess what, Bramo?
109.
Unchanged. 109.43. There we go. Going absolutely nowhere. Let's leave that one
That's
there.
your foreign exchange report for the day.
Under surveillance this morning, Boeing sinking in pre-market trading as carriers around the world grounded 737 MAX 9 jet. US officials recovering parts and data after a panel blew off the fuselage of an Alaska Air flight on Friday. The jet was forced to land after a sudden decompression with 171 passengers on board. No one was injured. The good news is, Lisa, no one was sitting in that seat. It could have been very different on Friday night.
There could have been deaths. There had been deaths in previous accidents of this nature. Raises a lot of questions going forward, though, for Boeing, considering that they've had other issues. This was going back to 2019 with the MAX 8, right? This was a previous iteration that had some problems. So 2 questions. One, what's the issue going to be? Is it going to be a manufacturing problem, or is it going to be something structural that's going to ground all these planes indefinitely? And 2, how is Boeing going to remain a competitive, retain some sort of competitive advantage versus Airbus with this type of cloud hanging over?
This is somebody on the zeitgeist saying, am I going to fly a MAX this, a MAX that anymore? Are people now at the point where they're going to look at Google Flights, figure out the flight they're going to take, and go, what's the plane, and go, I'm not taking it. I don't know if we're there or not. We'll know in the next couple of days.
I do wonder how close we are to that moment with some of these Boeing incidents.
Yeah. I mean, I know the planes I love, and I try to take them, but I go the other way.
I just shut my eyes, try not to pay attention.
I think many people do the same thing.
I just can't deal.
Boeing this morning at the pre-market, for what it's worth, down almost 9%. We'll catch up with Bloomberg Intelligence in about 10 minutes on this story. Your next story, congressional leaders announcing a bipartisan deal, hoping to avoid a government shutdown. Senate Majority Leader Chuck Schumer and House Speaker Mike Johnson agreeing to $1.59 trillion spending cap for the fiscal year. Talks set to continue on Capitol Hill to fund federal agencies and avoid deadlines set for January 19th and Lisa February 2nd. So the good news, maybe the so-called relatively easy part is dealt with, but ultimately there's work to be done in Washington.
Here's the comment from the House Freedom Caucus. It's even worse than we thought. This is a total failure. So that's the starting point on the far right of the Republican Party.
Yeah, well, to me, it was Isaac Boltanski said, I went up with what we just saw on the board there on radio. We had up the optimism of the spending cap. Boltanski said, forget about it. We got to get to January 19th, and it's a long ways away. And he mentioned the border debate, which didn't go away this weekend.
Did you see the Michael Semblers piece over at JP Morgan?
I missed
his year ahead outlook. Just a fantastic piece if you can get hold of it. Within that, he talks about the trajectory of U.S. debt, calls it a boiling frog. Every round of fiscal stimulus brings the U.S. one step closer to debt unsustainability. I don't think we're there, otherwise we wouldn't recommend long-duration U.S. government bonds. But we're accustomed to deteriorating U.S. government finances with limited consequences, and one day that may change. This is the line for me, Lisa. By the early 2030s, the CBO projects that all federal government revenues will be consumed by entitlement payments and interest on the federal debt. And at some point between now and then, there may have to be a reckoning.
Especially because a lot of the debt that we have is short term. And if you look, it's doubled going back to 2014 with an accelerating clip. So how long can we keep this up at a time when no one's really willing to cut spending? And this, I think, is going to be a major underlying theme in this presidential election, at least for us.
Over in Congress as well. Right now, there's going to be a debate. Let's finish on this story, just absolutely bizarre. The Defense Secretary, Lloyd Austin, remains under hospital care, but facing criticism after failing to alert the president and the public of his condition. Secretary Austin was sent to Walter Reed with severe pains on Monday, January 1st, then sent to intensive care after complications from surgery. The White House reportedly not aware of Austin's condition until Thursday. The Pentagon not providing details on the exact procedure. Tom is saying he's recovering and is in good spirits. Now, I said it earlier, we're wishing the best and a speedy recovery, but from what? We still don't really know.
I'm going to listen to the pros, and the pros are aghast, period. I mean, it doesn't matter. The politics has nothing to do with it. It's just a massive fumble by the Biden administration.
The president didn't know.
Yeah,
and seemingly the deputy to Lloyd Austin was seemingly
this
unaware
goes
as
back
well.
To, I'm going to take it back to Woodrow Wilson, but I'm sure you can go back into the 19th century, and I don't know it. But the answer is we need communication here, and that was certainly a lack of it, to say the least. We get communication now in Frankfurt, Germany. Sonia Martin joins us now, head of disinflation policy at DZ Bank. I'm making a joke there, Sonia, about what's out there, and that is the descent of disinflation. From all the research that you have of DZ Bank, just to begin, is the European model, for that matter, the global model, is the glass half full?
Well, yes, I mean, certainly we have had our share of issues over the past few years, and, things here are looking pretty dire. I don't know if you saw in Germany today, we have massive strikes. The farmers are striking, they're blocking all the highways. We have a train strike coming up on Wednesday for at least 3 days. I mean, it's pretty chaotic here. Certainly in terms of our growth outlook, things aren't looking rosy. I mean, they might get a bit better than they were last year, but that's not saying much because that bar is hanging very, very low. In terms of inflation, it's coming down, but I've said to you before, I mean, that last mile is going to take a long time to cover. So things aren't looking fantastic over here.
I did a thing out on LinkedIn over the holiday, Sonia, which had to do with Europe and the former Prime Minister of Italy, Mr. Gentiloni. And the basic idea here is everyone feels we've sort of gotten clear of 8% unemployment. We've gotten clear of Eurosclerosis. What does DZ Bank say about that? You have a micro-analysis that's original. Is Germany, and frankly the rest of Europe, clear of the plague of decades ago?
I wouldn't say entirely, no. I mean, particularly when we think about debt, for example, one of the big issues that we've been having in Europe, and that, of course, caused a major crisis just over a decade ago. I mean, we're not clear of that at all. I mean, if anything, last year it's been spend, right? We've had all these crises. Fiscal policy has been very loose. People have felt that they're justified in spending a lot of money, and I think the structural reforms that we so badly needed haven't necessarily been done. So I think that there is still a lot of underlying issues, and I don't think they're necessarily being tackled, if I'm honest.
Is the surprise of 2024 for Europe really going to come from China, and whether they can provide some stimulus and accelerate a little bit more than people expect?
If that were to happen, it would indeed be a surprise. It's not what we're expecting at all. I mean, China is looking very weak. They have a mountain of problems to deal with. And, with the debt levels that China has reached at this point, also a less and less ability to counteract economic weakness. I mean, the old method of just spend doesn't really work for China anymore. So they have to deal with all these issues. Obviously, the real estate sector is very hard hit. So we're not going to get a positive growth impulse from China this year. And this is one of the reasons why we're looking at still very moderate, weakish growth in Europe this year. There isn't really a source for a major acceleration of growth here.
Given that backdrop, is it plausible to you that the ECB can remain on hold and not cut rates as quickly as the Federal Reserve to really bolster this bet that we've seen on the euro versus the dollar to start the year?
Well, I mean, we all wish, I think, in a way, that the ECB would be able to cut rates, because, I mean, the rate level at this point is very restrictive. It's hurting consumers, it's hurting investment, it's hurting the real estate sector. I mean, it is causing considerable pain. And so from a purely growth perspective, it would be very desirable for rates to come down, but the ECB has to look at inflation and core inflation, super core inflation, all of that still remains, very high. And so there isn't really, I think, any leeway.
Well, there's labor unrest, Sonia, in Germany. I think there's labor unrest going on in the United Kingdom as well. That speaks to me of persistent wage inflation, a theme in America. But is that a theme for DZ Bank this year, that we're just going to see a persistent wage inflation?
Well, I don't know what my wage increase is going to be this year, so I don't know if it's a topic for us at DZ Bank. But the fact of the matter is, yes, we have had signs, and we've seen this last year, we'll see this year. People are asking for more money, understandably. And this is what I mentioned before, that the underlying inflation pressures are still very much there, coming also from the labor market. And we have seen labor unrest. We have seen, strikes going on, and this will continue. So again, for the ECB to now signal that it's time for rates to come down already, it's just too early and it's too risky, and it would mean that they might risk the progress they've already made on the inflation front. Even though, as I said, from an economic point of view, it would be desirable for rates to come down. I don't think the timing is right anytime soon, to be honest.
Sonia, just quickly, just to recap, favorite trade this year for you and the team, what is it?
I still think short dollar yen is a really attractive trade. I mean, I know things have been touchy now with the earthquake, but I think still the BOJ will have to move on policy, and I think short dollar yen is still a really attractive trade.
You've got a time horizon for that, Sonia, when they've got to move?
I think sooner rather than later, because the inflation rate in Japan is currently above the target, so the window's open now. It's going to come back towards target by the end of this year, so they can't wait too long. So I think by the middle of the year, they'll have to have moved.
Got it. Sonia, thank you. Great to catch up. Sonia Martin there of DZ Bank. Favorite trade? Short dollar yen. Looking for that stronger Japanese yen, Lisa, and looking maybe for a move from the BOJ before the middle of the year.
Wasn't that like a widowmaker during 2023, and now people are saying...
Just waiting.
And now people are saying no, but now they actually have to. And at least you have a bit more inflation and growth for them to really get behind in Japan.
The union activity in Europe, I'm fascinated by, because I think it's radically different than over here. It'll be interesting as 2024 unfolds. to see what that wage growth or lack of wage growth does, really in both geographies.
Dollar yen, 144.45. That currency pair, pretty muted price action. That currency pair moving lower by 0.1%. One thing that isn't moving lower in a muted fashion is Boeing. Boeing is down by something like 8-9% this morning. Coming up on the program, George Ferguson of Bloomberg Intelligence on the latest on Boeing TK with a stock down by more than 8%.
It's a huge deal. I think it's big. This is a much bigger deal than even has been played here. You're going to get into some reviews. Lisa's going to do team coverage out in Portland in a backyard. Can you imagine? You're sitting out there at the Barbie and that thing comes down.
Smartphones. It was raining iPhones, apparently.
Two of them, yeah, that they found them. I
mean, not funny.
No.
Funny.
Imagine how much worse this could have been.
Oh.
Just absolutely insane. Stock is lower by a little more than 8%. The latest from Bloomberg Intelligence in just a moment. The broader price action on the S&P, we're negative by just 0.1%. From New York, this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
It was going to keep winning World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
We look at Boeing's process for manufacturing this aircraft. At this stage of an investigation, everything's in. We go very broad. Nothing's excluded. It's pretty early on, but we don't exclude anything at this point of the investigation.
That was Jennifer Homendy there, the chair of the National Transportation Safety Board. Here's the latest. The FAA temporarily grounding the MAX 9 for safety checks after a fuselage section blew out during Alaska Airlines flight on Friday. Boeing CEO telling employees, situations like this are a reminder that we must remain focused on continuing to improve every day. Fortunately, no one was seriously injured, and the course, Tom, still being investigated. The stock down by somewhere between 8 and 9%.
When in doubt, talk to an expert. Let's dive into that right now. On the Titanic, there were rivets, and the rivets failed. On a 747, there's maybe 1 million rivets. A 777, still the technology of ancient times of piecing metal together. Maybe 600,000 rivets, whatever it is. George Ferguson is expert on this. Our senior aerospace, defense, and airline analyst on rivets and the lack thereof over the weekend. Was this a mechanical failure, George?
So I think this was a failure of fasteners. I think the fasteners were lacking, is my guess, is what we're going to find out. Obviously, I'm looking at this from 50,000 feet, but we're not finding plugs blowing out of other aircraft. We're not finding them blowing out of other Dash 9s. And so, to me, when I look at the piece that fell away, the cleanness of that of what fell away from the airplane, it looks to me like someone on a production line didn't install all of the fasteners that needed to be installed to keep that panel in place.
Are the fasteners, I'm the amateur, I'm going to call them rivets, are the fasteners on that plane the same? Are they ubiquitous throughout all of Boeing and, for that matter, Airbus as well?
They're obviously going to come from a lot of different manufacturers, but I think they are going to be very, very similar. And again, I think this is probably a process issue. I think someone just didn't install the fasteners or didn't install all of them. And I think it probably leads back into Spirit Aerosystems to manufacture the fuselage, which has had some problems.
George, let's talk about them. Spirit Aerosystems, for those in the audience that aren't familiar with that company, how do they fit in here? What's the broader story?
Yeah, so Spirit Aerosystems out of Wichita is makes the majority of the Boeing 737 fuselage. They make all of them. They were once part of Boeing, spun out a couple decades ago now. Spirit has had some challenges like the vertical stabilizer fastening issue, rear pressure bulkhead issues. There's been, I think, a lot of turnover at that company. With the pandemic, many people, I think, left aerospace thinking, why would I want to be in this business after they watch global air travel go to almost zero? And so I think the respooling up of that workforce has had, real major challenges at its Spirit. The U.S. job market is pretty hot. And I think, given the turnover, the training required in aerospace, the lack of, the big attention to detail, I think it's been really hard for Spirit to get things moving again down there. And I think that's what we're going to spend a lot of time looking at. We're concerned about the supplier base, but Spirit is sort of number one concern at Boeing.
Were they involved with the 2019 issues with the MAX 8 that Boeing also struggled with?
Sorry, you're not talking about MCAS, with the failure of the two crashes of the Boeing airplane.
The two crashes, yeah.
No, MCAS is more of a Boeing systems issue. They are very much just in the manufacturing portion of this business. But again, I'd come back to key to the Boeing recovery is going to be growth in production of 737 and deliveries of 737. We're starting to see that as the year ended in 2023. But Spirit is integral to that effort, to that recovery. If Boeing doesn't get things stabilized down at Spirit, where Spirit is delivering quality fuselages all the time in the correct numbers, the recovery is going to be really hard to keep momentum behind.
Is this a cost issue, George? I mean, I guess that's what I'm going to. Is it that Spirit really is the cheapest option for Boeing, and that is the reason why Boeing is sticking with that company, regardless of a potential production flaw?
So no, there was an agreement written in when Spirit was spun out of Boeing that they would be the primary builder of the 737 fuselage while there was a 737. So I think it's really difficult to take it away from Spirit. Spirit probably isn't the lowest cost provider. There's probably some that are overseas. But again, I think the U.S. had some real challenges as we've gone through the pandemic. Workforce turnover has been large, I think probably larger than we've seen in the European aerospace industry. And that's been really hard to get, a handle around. I think Spirit management really has to get down there and double down on training and double down on oversight on the line, because to me, this appears like a problem that happened on that line. And we keep seeing these anomalies come through.
George, let's push forward. There are